everybody. Let me turn this down. Get the war music off. So, it is Thursday, June 1st. This is Red Ben, and Ronan the cat will probably make an appearance or at least try to interrupt a few times. You can get a hold of me on Twitter at RedBenTrader. Then, if you want to learn more about the algo I'm using, talk to my coach Simon. You can get a hold of him by email at trade, the letter N, wordperform at gmail.com. The algo that we're going to be using is it's a visual based execution assistant. So it is reading the DOM, the order book, the footprint, things like that, and it's alerting me to conditions that we've pre-programmed it to watch for. So my algo looks different than what you would see in the trading room. You can actually request a 5-day free pass from Simon with the same email and see what his version of the algo looks like. It's a lot simpler. He's a much more active trader than I am, and so I like to have a lot of information, and for a lot of people, it's going to be overkill. But for my brain, like I need more input to sort of stay alert. But it's not necessarily the best way to do it. It's just what works for me. So let me turn on the live camera real quick. I've got something new today. I figured out how to turn off. Well, I thought I did. Hold on. Let's see here. There's a way. Let's see. There we go. So now we can see the DOM, which is kind of nice. Now on Rhythmic, which is what I use to trade on the Apex evaluations, you don't have, well, I don't pay for a full book. I don't need it. I don't need to know. I don't actually really watch this at all, except for two things. One, to put in my order, and I've got brackets kind of automated to set that up. And then, in addition, I'm watching the spread, basically, if the spread is extreme. So if this is like jumping back and forth 3 or 4 ticks, I don't even have to look at it very long. In the corner of my eye, if I see that change in behavior, like I know something's up, and so I might want to manage that if I'm like in a position or was looking to get into a position and suddenly it starts doing this, like. And then there's a couple other patterns too, other than just like illiquidity. Also, like there's like a pump pattern, which we'll probably see because we're trending up. So it'll go up like 3 or 4 ticks and then chill, up. It's kind of doing it right now. There we go. See how it's like up, chill, back to up 4, and then like comes back to the mid and then goes back again. And then it'll come back to that same spot where there was indecision for a moment. And then if they find buyers, it'll rush. It'll run. And the crazy thing about markets is those same patterns that we see on like a micro time frame, like a millisecond time frame, that same behavior is really what we're looking for when it comes to like finding higher highs and higher lows, identifying pressure in the market and the sellers trying to exit as quickly as possible. All those same patterns they're right here on the DOM too. It's just faster. So it's all fractal. If you know what a trending market looks like, it's just a matter of learning what the where to look and what you're looking for. But the theory is all the same. It's all just auction market theory. It's all the same. It's just on a smaller time frame. So if you've got a level that has a bunch of buyers like with an iceberg on it, like 80 is probably, I don't even have to see the order book, and I can just see that they like approach, and then like someone puts like, you know, 9 there, and then it just goes. See that? So like all of a sudden there was 2. Oh, and then see it goes through it. So now we're going to go back to 80 or whatever that is, 60. Wow, I can't see. Sorry about Ronan. He's noisy. Ronan, stop. I'm not playing with you right now. Oh, and I missed it. It went, I turned around and it went right through. And so, but the idea is once we've gotten through that 60, what we now have to watch for is whether or not sellers are piling up here. Now, we're not going to see it on the order book because I don't have the full book. But like I said, I don't need it because I've got the ledger on the left with the algo. I know whether or not this is an area that I even want to consider fighting back or not. The simplest way that I found to explain how to tell which direction we're going, and I talked about this in my last stream, and I think it works pretty well. If you see a pink bar and you can get a purple bar below it, like this, here, we can actually take this if we want. If it closes, we can take it at 50.25. It's risky. We really shouldn't. But technically, if it would have closed bearish, there's a chance that it pulls back. The problem is we got this big hammer here, and it's not gold, which means that there's a trapdoor under there anyway. So we're probably better off waiting to see if they can like exhaust a little bit before we really fight this. We don't have any, well, we have divergence here, potentially. So if they can get under this, it could roll a bit. But generally, you're not looking to go the opposite direction. But we shouldn't be fighting the trend. And really, we shouldn't be making any directional decisions unless we have like a higher time frame reason to. But unless we can get behind a pink bar with a bearish bar and this yellow line. So the bearish bar has to close, and we know where that's going to close on the algo right here. It's going to close at 50.50 if it's bearish. But if it gets to 62, it'll close bullish. And then it's going to continue higher because we can't get any bearish bars below bullish bars. So if you look at this yellow line, that's where most of the volume is in each bar. And so volume went higher and price went a little bit lower. But now it's returning to that point where all the volume was. That's not bearish. This just looks like sellers are trapped, and the moment that they get an opportunity to buy, to exit their position, they're taking it. They literally can't even get a bar underneath any volume. Like they can't even, and these bars are 15 ticks. So like they can't even retrace 15 ticks and put another 15 ticks underneath wherever volume was. That's not bearish. So to be bearish, we need to see that. Now, if you look at this turn as an example, the pink bar here is what I'm concerned about primarily. I want to see them print under that with the yellow line and see how it can't even get to the low. And when it does try to go down, it closes bullish. I get a star to identify that, and a blue dot to identify that there's aggressive buyers there, and I can follow them. And it doesn't really get any easier than that. But if you can see that volume is dropping, but price is rising, and then, like I said, if you wait for the algo to tell you there's an aggressive trader in here, and then the diamond says that there was actually a lot of volume on this, like volume and range in a way that like maybe we wouldn't expect at this point. So like they were trying to defend a level, yet the diamond says even though that happened, we closed above wherever that seller was. Here, I'll show you on the profile, on the look, this is the footprint. So we're gonna see, we should see an arrow pointing to a seller. Do I have it turned off? No, that's not it. Why don't I see you? Okay, so it must be that I didn't draw it. Where'd it go? Oh. No, there it is. Okay, so it must be the... No, that's not it. Okay, so it's very recent. Let's draw it here. 1102. I must not have it's in these wicks. Oh, no. I'm wrong. Here, we're just going to move it to point to the same spot. And it's in this wick. Okay. These are two different time frames, basically. The bars are just bigger on the left. They're 24 ticks, and these are 15 ticks. So you can, the same patterns, it's just different time frames. So let's see if we can find that. There it is. Yeah, I was going to say, I don't know why it wasn't copied before. But okay, so there should be an aggressive seller before this, because I'm pointing to the, I think, nope, I pointed to the seller. Okay, so I was like, wait, I don't actually remember. Okay, so that is the aggressive seller. I literally pointed right to it. So you can see that there was a seller here, right? A sell bar. It's red here on the footprint. So time-wise, it ended down here. But then you could look at where most of the sellers were, and they were underneath buyers. So here's the buyers from the bar before. These aren't Renko bars. This is just the profile. This is actually volume-based. Every one of these bars has 2,000 contracts at volume in it. That's how this works. But it's just another way of looking at the same info. So see how all the sellers are here? Like there's much bigger volume. That's not coincidence. It's because they got underneath these guys. So these guys pushed. They need a little bit of extra energy to go any higher. They ran out of energy. Sellers came in right at the top, pushed them down, found more energy, and pushed them down here. And look at how hard they're pushing down here. They're pushing hard, right? Like, I know it's not colored, but look at how high those are compared to, like, all these and all these. And just to the left of it, you can see we had some buyers down here. So that's what they're working through, is the people who are defending these levels. They do push lower, and look what happens. We get a big push, right? Lots of volume down there at the low. But we go higher. So, and we do it quickly. And that's what the algo's telling me with this white diamond. Just the white diamond alone says there was a big seller in the previous bar and we beat him quickly. So is it always a place to buy? No. But if it's bullish, it should hold. In other words, if this is bullish, this low should be defended. You don't have to buy it right away. You can say, hey, there's a diamond. I'm not sure if it's bullish still. Let's see what happens when they pull back. They pull back. They immediately go back up. You get an opportunity to get in right here because by this point, you kind of already know. If they would have dropped it, they would have happened right there. And they didn't. And see how these blue dots line up? It's a little bit vulnerable. If we get price back down there, it's probably going to break that area. But when they don't break it, it's clearly bullish because that everyone sees this on the footprint. This is a sign that inside of these bars, there's a pivot point where there were sellers in the bar, but by the time the bar closed, it turned into buyers, gaining, not just closing the candle, the bar, but like taking control of price action. Now, those dots do depend on what happens immediately when this bar forms. So when you're watching it live, you will sometimes see these dots appear and disappear, kind of flash. You have to wait to be, if your what's it called? If your trigger to get into a trade requires those dots, like if you use the dot as an entry signal, you technically have to wait one bar to close before you know for sure that it's going to stay there. It usually does stay there, but it doesn't have to for one bar. And particularly right in the beginning of the bar is when they tend to disappear. By the time it's moved down, if it's not disappearing, it's not going to go. But by the time I get this bar, I know this dot's not going to disappear. So this pullback can be bought. Now, I was setting up the stream at this point. I did not buy it, but that is one simple pattern. Now, if you look, if you missed that, let's say you didn't buy here. The other thing I mentioned is if you have a purple bar pretty much anywhere, and you can get volume, the yellow line, above it. See, and then it also has to be above one other thing, but if you look here real close, if you're looking on the phone, you won't see this. But if I draw a line right at the top of the purple bar, we got the yellow line. See the dash there? That's where it interacts. It got above that high on a bullish bar. As long as we are trading above where most of the people got, took action in the last, period or whatever, it's bullish. So this dotted line here is basically the developing volume point of control. It's a little bit tweaked. It's not exactly like a daily one, but that's the concept. And so I can have a general idea that most of the people, like at this point, right here with this hammer comes in, most of the people in the market have done business lower than that. That should kind of make sense. But it basically says there wasn't a whole lot, it wasn't a ton of volume in here, which is good because it's at the high and it's not breaking out over anything. So it's good for bulls, I mean. But short term, we're going to have to come back and test some of these levels where that dotted line went flat. They want to know, are there still natural buyers there? So here, see how that's where the buyers were? For a while, the majority of people were actually underwater here, meaning that a lot of people are doing business in this zone. So if I draw a volume profile of where does it stop? Here. And then I'll color it so you can actually see it. What you're going to see is a high volume area. This one. And this one. So let's make it visible. Okay. So we're going to erase the lines. All right. So see where the peaks are? Here, here, here. Right, those little peaks are where most of the volume was. Oh, and here. So if you look at where we traded in that area, it's this to this. That's where all the volume is. So where should we expect volume to go? I mean, price to go is back to check on that volume. So what we should see, if we extend this, it's basically going to be the green area, but let's extend the line, extend the drawing. So it actually technically goes up to here. So, because there's a high volume spike there, and then this is the edge here. So normally what you're going to see in a trending market is it's going to go higher unless it traps somebody. See how the dotted line went way up? So we had a bunch of buyers up here probably, and sellers actually. Well, the bar closed bearish. They're all sellers and buyers, but when I say sellers, I mean aggressive pushing of the hitting the bid. But naturally, once that starts to happen, what you're going to see is they're going to pull back into this high volume edge right here, and sometimes into the high volume area. So we don't just want to buy. That's not going to do it. Certainly not when we're trading a eval with a bunch of rules. We don't want to just buy because it's at a level that we expect them to bounce at. We need to actually see them winning. Now, that does mean that we won't have as good of risk reward to our first target. And it may mean that we don't have a trade at all, particularly when the dotted line is way above us. It suggests that best case scenario, oh God, I got to be careful. Last time I messed up the windows by doing that on accident. best case scenario, the first move is probably going to come to this dotted line because we have stuck buyers up there. So look, if I extend this, you're going to see we have another high volume area. And I don't have to draw it because I've got the algo dotting the important level. So this level here is my high volume edge. See that? Now, generally, wherever there's a yellow dot or a blue dot, and these are different than on Simon's. On Simon's, they mean something totally different. I had the dots already like, I used the dots for a different signal that I developed, and he just like coincidentally used the same color and same symbol to do something else. So it's just happenstance. There's only so many indicators, colors and stuff on Sierra charts, so chances are you're going to get some overlap. But the majority of these are his. It's just, that's one of the ones that I developed myself, and it just happens to look like one of his, but those are not the same indicator at all. They're not related at all. I'm not trying to replace it. It's just an idea that I had, and I just happened to use the dots actually before he introduced the dots. So I have to figure out what to do about that. But if I want to put his dots on mine, which I haven't yet, I'd have to figure out what to do with these. I could like change it to like a dash or something. Like, I don't know. I've already got a star and a triangle. I guess a box maybe. I don't know. Anyway, what we expect is for them to come back up here and test this high volume area, or at least the edge of it, just like they're doing right now. So that is normal. Let me just erase this. I'm sure everybody sees that now. So this is, like I said, like normal. In a trending market, you're going to come back up and try to break through this. But if sellers are waiting up here, and we can watch it on the DOM, or we can just look at the algo and see if we get a signal. If sellers are waiting up there, you're going to see a change in character, most likely. And they'll come back for this pink area, the volume point of control down here. And that's where the dotted line was here. It just overlaps with the pink. So that's my next like high volume edge. And then I think what I was saying with the dots is there's usually high volume edges beyond the dots. So here's a high volume edge, and you look to the right and you'll get a dot there, right? Here's a high volume edge, look to the right, you'll usually get a dot there. Not always. You can't just like sell at that level because there's a high volume area and assume that it's going to be a dot. But I'm just saying, if you're going to get a dot there, that's where it's usually going to show up, is when they come up to the high volume edge and they get a shift in volume. You will see the dot early, but it might not stay. Like I said, until you don't know for sure until this one closes and then the little one after it. So you need 45 ticks of movement from the point that the bar opens before you know for sure that that dot is good. So like this one's not going to disappear because we've already printed the bar above it. And the next bar, it doesn't have to be above it, but either direction, the next bar needs to close to be sure. But that one is a high volume edge, and it is bullish. So could they just break right through here? Yeah, it happens. But there needs to be, you'll probably need to work for it. You're not going to get it with pink bars, most likely. Because the pink bars and the purple bars are signs of basically like decreased liquidity, where price is moving primarily due to people pulling orders off the order book, either because they changed their mind or because they were spoofing. I mean, we don't, there's no real way to prove if they plan to do that or not. But one way or another, it's a sign that there basically is no sellers compared to like previously. And so we were in this area before, they were sellers. We've now come back up and all those sellers are now gone. And that's what's causing the price to increase. That's not necessarily bullish or bearish. It's just an observation. And then it's our job to come up with the patterns for what happens when it's bearish and we see illiquidity causing price to go up. Well, what I'll tell you is what often happens when it's bearish is the yellow line drops below this low where the illiquidity started on a bearish bar. So price drops and volume develops lower. So on the footprint, what you would see, if I look at right now, these are the pink bars. Volume's very low. Everybody, all the other areas where there were probably at the time there were probably sell orders sitting here, and when they came back up, they pulled them. Right, and so you got 1, 2, and then all the way up to here. Like I said, these are volume, not tick based, but see how there's like no volume here, even though there was some over here. So these guys were going to defend. They had orders sitting in the order book, but then by the time price got to them, or maybe as they started to get filled, they pulled the order, causing price to slide up, even though there's really nothing pushing it. It's just the absence. It's like a vacuum. So if it's bearish, that vacuum not only gets retested, because that's natural just to retest it, but when they retest it, a bunch of volume will come in below where that started. It's one thing to have volume attack it. That's normal too, because the sellers know that when this move happens, if they attack it and there's not actually any natural buyers there and it was just going up because people were pulling their orders, they're probably going to get paid. It's going to go lower. So it makes sense to see volume here. But what we want to see is, can they get volume below where the pink bar started that turn? Can we get volume below this? Not only price, but pushing with volume. Are they attacking the breakdown? Right? So note here, you've got a bunch of volume. And so now, even though this bar looked like it might be purple initially, because because buyers are trying to fight back, it's not going to be purple. The purple bars are the exact opposite of the pink, by the way, if I didn't mention that already. So it's just price dropping due to illiquidity and people pulling their buy orders. So a lot of bars will look purple right away, but what matters is if they're purple or pink when they close. It doesn't really matter what they are when they're live. It only counts when it's closed. And that's a very important thing that it's very easy to like get hyper focused on like looking for a signal or a pattern of signals and making decisions before the bar closes. It's a really bad habit. Don't do it. So you can see there's a purple bar over here, and we got volume above it. But if you look at where the majority of volume was over time, it was way up here, meaning that we had buyers stuck up there. So even though we got over the purple bar with volume and price, you can't buy it because you're buying right into the spot, the dotted line, where there's trap traders. And it's above us. So we don't want to buy. If you're selling, that's good. So if you can get under the pink here with the yellow line and volume, we're also on, and if we're under where the dotted line was there at the pink, which is here, it's bearish. The problem is our target is this high volume edge. So, and you'd have to put your stop up here. But note we got the yellow dot, and again, it could technically disappear for this bar, so it's not valid yet. But once it closes, it looks like it's not going away. So now it's valid. So there was a volume shift at that level, meaning pullbacks into this level can probably be sold if you have risk reward. And that's the challenge, is that the algo is not going to tell you whether or not you have expectancy. It's just going to tell you this is going on the footprint. It's our job to sort of decide ahead of time, like, I'm willing to short this or I'm not. But one way or another, I would still need one more bear bar here to close. And that little line, the dash that's down here, would have to be under this, which it is right now, but it's going to close bullish, so that's bullish. That's actually bullish. We're going to take that. That was a little late, sorry. That was sloppy. So we're going to see if we can get... It's a little bit tricky because we've got the dotted line up here, but it shifted down. So there's a good chance that we run here. Our stop needs to go underneath there, unfortunately. So that's fine. And then if it gets stuck, it's going to be right where these trap traders are. And then it's probably going to get under this and then run. And you don't really know. Is it going to be this time or next time? It's way more aggressive to do it so close to the top because our risk reward is not great. So it may fail. But there's enough momentum here that I feel relatively confident that when this does break out, we'll get 1-to-1 or better. So, worth a try. But purple bar immediately followed by a dot, the blue dot, that alone is pretty strong. If it's got a star, it's even better. And the fact that this was outlined red means that sellers were actually defending this area on the footprint, or the DOM if you want to look at it that way. Because the footprint's just watching the DOM, basically. The time and sales, I guess. But, yeah, they were defending that area. And even though they were defending it, we ripped back up. And the dot suggests that there were actually sellers at the lows. So they got trapped. So does it have to break out? No. But if I was going to pick a spot to try, I want to see the purple bar get traded over with price and that little volume line, the VPOC of the bar. I want that to be above the high where this purple bar started. For the exact opposite reason as I was looking for a bearish bar that closed underneath the pink bar to think it might be bearish. It's just the same, it's just inverse, right? The purple is just inverse of pink. So get over purple with volume and price. And as long as you're over where most people got involved, which over time was here, you have a pretty good chance that it's going to at least try to go higher. Does it have to break out? Like I said, absolutely not. Sometimes it's going to fail. And the better risk reward you have, the more willing to take that trade we should be. And it's also okay to wait. If you don't have good risk reward, you could wait for this to close and then get long here. That's totally fine. Like I could actually have gotten long or add down here if I want to. Totally fine. But your stop still goes under this somewhere. I'm putting it under 40 or 40 or so because there's a high volume edge here. And like I said, it's not unheard of at all to see them come down here, slip below there and then run. And it's still only 15 points, so willing to risk it. And I'm a little bit more... I feel I want to get into trades because I've got an audience, so I might not have taken this if I was like negative on the day or if for any reason I'm unsure about the area. It's not the highest odds trade, but it's a trade that usually works. So really the only question is how many times do they have to attack these sellers up here before they give up? And like I said, I don't have a great way to know that. But you can always skip the first one and then take the second one. That's okay too. Or wait until you get really good risk reward down here and put your stop down there and take the first one if it gives you good RR. Because like, look, if I would have waited, rather, because I chased it a little bit, right? If I would have waited for 47, that's a 7-point stop. And the high of day, I'd be looking at a 20-point move for my first scale. Like, 20 versus 7. That's almost 3-1. Doesn't always do that. It often just zoop. But what I probably should have done had I not been distracted is as soon as I see it, be like, I missed the good entry because I didn't have. Because normally, what I'd do if I wanted to buy that is I'd put the stop order right. See how it tells me where the bar is going to close? So, like, once it gets to 50, technically it's got to go through 50, so 75, that bar closes. And so, if I was looking for that bar to close, that's where your stop order would go if you really wanted to, like, just buy a breakout or whatever. Normally, I don't just mark it in. Once I see that, it's like, if I was planning to get in there, I'd be like, okay, there's my signal. Now let's see what they do with it. And if they pull back a bit, it's like, okay, I'm going to wait. And then you could get long like now. Once you've gotten some confirmation that you're going in the direction you want. But sometimes you will miss the breakout. So those little like execution techniques are, it takes a lot of practice to do it right. And honestly, like, I'm not great at those things, but I'm pretty good at reading what's going on. But if I had to pick something to really work on, if that would probably make a big difference in my trading, the two things are holding trades that are working, or at least partials, because I've gotten so used to scalping with these evaluations that it's become hard to like hold winning trades in the performance account because I'm so used to it, like basically like punishing me for holding trades. So that's something. And then the other thing that I've just never been great at yet, because I haven't developed the skill enough, is like making like decisive action, like, yeah, taking decisive action, whether or not it's immediately getting in or planning on like putting a order somewhere and leaving it there and letting it get hit, rather than like having a plan for a trade, being a little distracted, seeing it's working and just be like, oh, that's good, take it, right? And those 7 points of difference or whatever can be the difference between a win and a loss a lot. So you might actually have a lot of things right, but if you're not executing thoughtfully, your win rate's gonna be really much lower than it could be. So like I said, it's something I'm working on. I've gotten better at it, but it takes a lot of focus, which I don't have when I'm streaming. All right, so they were unable to get under this pink bar with volume. And see how this one was pink, but it hasn't closed yet? So it just means that sellers are actually fighting back. They're not just like pulling orders. So closing that bar is actually really strong. There we go. So I got filled on my first one. And now I can think about where I want my second one. Because I just took 2 contracts. So like the first thing to do is just probably look at the candle chart. And just decide like, is there an area that I expect to hit? So like 96 would be like pretty sweet. Right? So that's, in case you guys are front running me, I'll do like 90. I don't know if it's going to go there. And then if you're trading on an apex evaluation, you can't let it roll against you. So it's very possible that we have to get out of this trade and it goes higher. But if it just spikes, you want that limit order somewhere where you actually think price might get. But I don't want to give back whatever that is, 20 points, because with the evals, it's like you bought at the very high all the time. If you're at the top, like right now, this is the highest this account balance has been because it was brand new. So as long as that account balance got to like 15 or 150, 300, let's say, the rules are I can give back with the 150K, I can give back $4,500 from the high watermark of my max account balance. So the fact that I got it to 300 means that they're now calculating that 4,500 from the 150, 300. So, like I said, an easy way to think about it is it's as if whatever remainder position you have, you got in at the very high. So if you wouldn't hold, if you chase this, then you need to get out. Now, the good news is with the performance account, once you make $4,500, that drawdown pauses. So you can go back to trading appropriately, like logically. Because it really isn't logical. Like, I should be holding here, but I don't want to give back because I'll actually lose money on this trade, even though I've already made money on it from the perspective of the trailing drawdown, which is all that matters on these. Yeah, we're going to get out. That's too bad. Oh, did they fuck me? No, we're good. Okay. I was going to say, it looked like they had come down and tapped it and ran. I probably didn't even have to hold it that long. And so it looks like I've made $210, right? And I have. I've gotten $200 closer to my goal. But my goal is $159,000. So, and I have to make $159,000 or get it to $159 without giving back $4,500 of the account of the max account balance. So, like I said, I would still be in this trade. I honestly should probably get back in. What the hell's going on with my mouse? Okay, we're gonna see if we can possibly get. I mean, it doesn't really matter. Let's let it go. It's technically not an entry. And like I said, it's still as if I'm getting in at the highs since I'm at the max, what's it called? Account balance. Since I got to a new max account balance, it's if I'm going to get long here, it's no different than getting long here. So as you push that account further, it becomes more and more important to not be too aggressive. Now, one way to fix this is I could change this to 1 and then just take 1 contract here. And that way, my give back, if I'm wrong, is going to be half as much as it normally would. But if it's a winner, it can push my account balance higher. So that's one solution. But I think the most obvious solution is you just have to take profits consistently and then be really selective. Like, even though I'm pretty sure this goes higher, I also know that we could technically trade down here and then bounce. So if I was trading cash, I'd still be long and I'd leave my stop down here. But I know that they can do this. So it makes buying up here pretty horrible. Even though I have risk reward to do it, if I think we're going to 90, right? I don't want to risk like 20 points because that would put me not only negative, but also like shrink my, like take away my cushion, right? And that becomes the most important thing, is that you just can't lose $4,500. It's not hard. If you have a system that has like edge, hitting the target isn't like making enough. That's not the challenge. Anybody can do that with enough time. It might take you 2 months or something. But with these evals now, it's like 80% off the first month and following months. So it might cost me another 65 or 70 bucks or whatever it is, but I would lose a lot more than that if I tried to trade my own money, like 150,000 worth. I'd be risking way more than that on a regular basis. So if I want to trade their money, it makes sense that I'd have to take some extra precaution and they want to make sure that you can adjust to things like that. And I think it makes sense. Do I love it? No, because it's hard. But the hard part, like I said, is not making the money. It's not giving it back. That's the hard part. And the more you make up to your target, the kind of harder that gets. And the more strict or the smaller you have to trade. But like I said, once you get the performance account and you basically get to the target again, or you cover the amount that you would normally have as a trailing drawdown. So for the 150, the trailing drawdown is 4,500. So once I make $4,500 in the account, as long as I don't withdraw anything, or I do, but I get the account back to 4,500, the trailing drawdown's paused as long as the account balance doesn't go underneath 154,500. And so you can start taking shots. You can start holding runners like you're supposed to. Like, you get to shift your techniques, right? And that has been hard for me because I've gotten pretty good at being like a chicken with these, because that you kind of have to trade like a chicken. I hate to say it, but it's true. The way to get these qualified is take 10 points, take 10 points, take 10 points. And if it rolls 5 or 6 against you, just wait for the next one. Because like I said, if you make 10 points and then you stop out 20 points below your entry, not only are you negative, but now you've actually lost cushion. So you would be better off not taking that trade at all. And that just blows my mind for a while because it's not logical. It's like, what are you talking about? It's break even. No, you shouldn't have taken the trade if that was your plan, because all it did was shrunk your trailing drawdown. Like, I mean, I know you did break even, but you were better off not taking the trade because then you had 4,500 rather than 4,000 of cushion. So you just have to adjust for a little bit. It is frustrating, but it's temporary. At least with Apex, it's temporary. Eventually, once you make enough money in the PA, you don't have to worry about a trailing drawdown as long as you don't withdraw or lose enough to push your account balance back below that threshold. So there's a link in the video comments if anybody wants to learn more about that, by the way. And the sale right now is like 80% off any evaluations up to 20, I think it is. And no, it's unlimited, but you can only have 20 PAs. That's right. Unlimited accounts for you can use it as many times as you want. You can just only have 20 performance accounts. So and I don't have 20 yet. So I'm still working on the evals, but yeah, once you do get to the performance account, you do have to trade differently, and that's been a struggle for me because I'm trying to do both. I'm trying to build my like add horses to the stable, basically. Because the nice thing about having multiple accounts is like I could trade small size and not really risk too much in any account, but when you pool them all together, it's actually a significant amount of money. Like, I can trade micros and target $200 a day. And with my 2 accounts, that's $400 a day. And $400 a day, that's a decent income. You know, if you can average that. And like I said, since it's pooled across multiple accounts, the more accounts you have, really the smaller you can trade and the less you have to risk. And you can still make that $400 a day or whatever. I don't know. That's the way I see it. I know my coach also pushes, like, once you've built a stable of them, you could use one without, like, so you don't have to do the trade copier for every trade, but you can push one button and have them go to all your accounts, or just 2 of them, or double what you want. Like, you can, it's pretty customizable. Sometimes it's got glitches, which is frustrating, but if you don't use the trade copier on one and you use that one for, like, what we call shot taking. So, like, you build the cushion so you no longer have to worry about trailing drawdown. Maybe do another like $2,000 or $3,000 of work in there. And then rather than taking 2 contracts, maybe you try with 4 contracts. And if that one trade wins, now you've just banked like another $1,500. And then if you want, when that like good expectancy comes up again, you can hammer the 4 again. And eventually that can be the account that does most of the withdrawing. And the other accounts can be like building, just, you know, churning $400 a month or whatever. I don't know. That's my, you have to have a strategy with these things to keep you like focused when it's frustrating. It's like, you got to be able to see how would I actually use this. Oh, that's nice. So we got a star that's green all the way at the top. Let's see if we can get under him. We could trap him. These stars with the green background, the green outline, they belong at support. Now, it might be new support, right? You don't just want to fight it. But if they do get under it, it could be a lynch point or a linchpin. We'll see. If they don't want to fight it, it's just going to break out. So they're suggesting this is becoming new support. Interesting. So see how they can only get pink up here? So sellers are just pulling their orders and like giving up. And now buyers gave up. So it's like, oh, well, if you're not going to take it, I will. Again, watch this dotted line. That's where most of the holders are positioned. So if we can develop volume under that, sellers are basically winning this area over the last period or so. Like I said, it's not exactly how it works, but it's close. It's my best estimate. And you can watch how it shifts. See how like it shifted up here? And due to that shift, you got a pullback. But that pullback did not get us back to where it was before, which is bullish. If you have price going up and then volume shifts up, price usually comes back and tests that volume area if it's neutral. So it doesn't have to happen right away, but we would expect price to get back here. And if it doesn't, it's not bearish. So if you are going to short up here, you have to target that. Like this is a home run trade for shorts right now, believe it or not. I know everybody wants to think that like you're going to take this all back, but believe it or not, that's the exception, not the rule. In normal conditions without news and stuff like that, you're just going to come back to the volume point of control of that move up, and buyers are going to try to defend it. Whether or not they actually do it, we don't know. All right, coming up on that green bar's low, like I said, if we can start getting under that, we can see fireworks. But you see why I didn't want to hold that long? Because it didn't convince me that it was gonna, like here it looked like they had a chance of breaking out. But once they came up here and it just kind of didn't do anything and it pulled back one after a pink bar, it's like, and especially when it's red like this, it like they defended that level. So there were no sellers here, and then suddenly sellers defend. And they defended successfully. So from my point of view, it's like, I don't really want to be long yet if they're going to pull back. Now, like I said, it did not hit my stop. So if I was trading in a performance account without the threshold, I'd just hold and put my stop down there and figure, hey, I got most of my risk off. I'm just going to let this go. I don't care if it takes an hour and a half. I just think there's a good chance the buyers are still in control. And that is true. But when you're trading against this trailing drawdown, you can't risk having it come all the way back on you. It's just not going to work. it's okay to get back in lower or whatever, but then you have to have like evidence that, well, the nice thing about getting back lower is that your the amount you could lose when you get stopped is smaller, right? Even though okay, we originally got in here, right? It went to here. From the point of the trailing drawdown, the most I can lose or give back is all the way down to my stop. That's the amount that my trailing drawdown would shrink. Whereas if I get out of the trade and then get back in, my risk is actually this. But like I said, what makes sense to me is take one contract here after the 2 contract one worked, because otherwise, if you give it back, it's actually 2 of these, right? Which is more or less the same thing, which is why it works to take the trade, because normally most of your risk is out and anything else is just gravy. But if the trailing drawdown is more dangerous than losing money or missing opportunities, then you get out. But I realize that is mind-bendingly frustrating because it's not logical, and the result is a ton of times you're going to get 12 points and then give back 5, and then it's going to go 30 and you're going to miss it. But you know what? You're at the max of your account size and the market can set up again. So does it mean that it takes longer? Yeah. But are you likely to be blowing up every other day? Nope. Not going to happen. I mean, it could if you tilt, but it shouldn't happen. Believe me, I've blown up plenty of these. So I'm not saying it can't happen. It definitely can. And it's actually very easy to do. Usually what it involves is hitting this button a couple times. That's usually what it involves. Is I'm down $1,000. If I just take 6 contracts here, get 10 points, pretty much back to neutral, I can easily manage that. And hey, if it stops out, I'll just buy a new one for $70. They're cheap, right? That's the mentality. And that is basically your brain like giving up on your process. It's like, I don't want to be patient anymore. This is frustrating. I was in this to win money. I'm impatient. I want to get this thing done. I'm just going to buy the breakout, right? I'm going to buy it with 6 contracts rather than 2 because I'm frustrated that I got out here and missed this, right? If that's what you do, you're going to blow it up. And honestly, you might as well just paper trade until you can accept that for a month or 2, maybe 3, you're going to have to trade differently. And it's not going to be flashy very often. Sometimes you'll get lucky, right? And that first lift or whichever one you decided to take actually just goes. Well, now you did great because we had a runner. But when they chop, rip, if you didn't get another signal, we might actually get one right here. Because of the diamond, I missed that. But if we get a pullback that holds here, see this guy, the diamond, remember, means that this guy was was aggressive. And so as long as we don't give that up, it's bullish. So if they come down here and we see them defend that, you can try for a pretty low risk, meaning like you won't lose much, opportunity for the breakout. It won't always work, obviously, but your stop goes right under here. And they either lift it or they don't. And the idea is just get long as close as possible to that diamond. Now, the one issue here, again, is risk reward. So you really do need to get it dipped in here to make that work out. Because sometimes it's going to get up and sweep up liquidity and then just drop. So if that's the case, you want to be able to take one contract off here. And to do that with good risk reward, I need to get long around there. So I could buy it anytime now, but I'd prefer to do it at least after I see some like sign of them trying to accept that this is a good spot. I don't want to be the first one. Let's put it that way. Purple. So that means buyers are giving up for the moment. We don't want that. Let's see if they can print it purple and then turn it around. That would be ideal. And if they just rip it, I miss it. Yeah, they might just go. That's too bad. I saw it on the Dom too. It was like, looked like it was ready to go. And like, it's not wrong to enter here. You just have to make sure you put your stop down here. Fast. Because it can happen very quick. So see how volume shifted? So that's a bit of a concern because now we really need to get over that. That's the level where everybody, the majority of people are like positioned. So it's a very likely resistance. So now if they close this bearish, they're going to have a yellow line below the blue dot, the blue dotted line, and that's usually bearish. So they need to, now they need to close it bullish to really look like they're holding it. But by that point, our risk would be here, which would suck. So instead, we're going to have to wait for them to print a bar bullish and then buy a pullback, which might not come. And again, the setup I talked about before, that setup back here with the diamond, where'd that go? Right here. Right? That's basically what we're looking for. You just don't know if they're going to turn it here, here, like, you don't know. Until they do it. And a lot of times, you can buy the close, but not when the resistance is 4 points away. Personal opinion, it's not a good idea. Even though, when it breaks out, it's a big breakout. On the evaluations, not going to do it. Not when I know that I can just wait and I can get really high odds 12-point scalps at least a couple more times today. Why even risk it? Now, interestingly, if you're not at the max of the day, or at the max that it's ever been, I mean, on that account, it actually makes some sense to be a little bit more aggressive, because now your trailing threshold is still based on whatever your max account size was. So assuming you're not approaching that level, you can now hold your runners and stuff like that until you get the max account up above the previous max account. So the reason I have to be patient here is because this is the highest I've gotten this account to be. But if I take 3 losses or something, and I have plenty of room to the blow up point, but I've also got to make back 2 or 3 trades to get back to my max, or to make a new max. Now I can hold runners because the trailing threshold just holds at that max account point. So it's always 4,500 from that. So it's not going to make a difference if I, lose 3 and then win 2, lose 1, win 2, lose 1. Like, eventually, not until I make it to a new max account level will I have to start being patient again. So That also takes some getting used to. But you just have to keep an eye on what your what is it called, liquidation level is, which it shows you on Rhythmic. Basically says if your account goes below this level, you failed, and we'll liquidate you, and you'll have to. You can reload it, but it costs $70-$80 depending on the sale. But see how they're struggling right here on that dotted line? They can't really... They're pushing above it, but they're not finding a lot of buyers up there. Because there's trapped buyers up there, perhaps. All right, well, they got it. Now let's see what happens. So again, if I wanted to be aggressive, I could have bought this, but my risk reward was pretty shitty. This is very high for an X. The X's work way better at support. The fact that we're like grinding like this and we're way at the top of this. See the channel, the shaded channel? That's like where most of the contracts are expected to trade hands if it's balanced. So if it was super bullish, we'd be above that. And then you can just buy almost anything. But when we're still stuck in here, we expect these signs of aggression to the upside to show up at support down here. This one's a little elevated, but volume is right in the middle of the channel, more or less. So it's not super scary, but if I was long from here and I hadn't taken any profits for some reason, I'm thinking, you know what? The next spike, I better get a third off just in case this fails, because that breakout is being defended. And look, the dotted line shifted up again, which means a lot of people got involved up there. And so if it was bullish, it should go higher right away. And it's not. Are they going to get a purple bar to close? Wow, buyers just gave up. Wow. Oh, that must have been news, right? That was crazy. Everyone just pulled their orders for like 30 ticks. Okay, so they got underneath this, right? Did they get underneath a star? Yep, that's a star. So this is bearish. Let's see what happens if they pull back a bit. See the divergence though? Volume aggression was not as silly here. Even though price dropped, there wasn't a whole lot of volume aggression. It doesn't mean it's bullish. It's just might not go down very fast. Or they might defend it. The yellow is percent R, so that's got more to do with range, like how big the bars are. And the bottom one is volume aggression. It's kind of like volume delta, but not, the math is different, but it's similar concept. Yeah, I'm not going to go into the math. There we go. So that dotted line shifted down, and now they can't get back up here. These guys are trapped. Remember what I mentioned, that the X's can be exploited when they're that high? That's what they just did. So where should we be targeting? This green line here, because that's where most of the buyers were. If you remember, when we measured this, most of the buyers were in the green, that pink line. Until that breaks, it's just a pullback. So it's neutral. It's bearish in the sense that your buy orders aren't going to work, but whether or not you actually have a setup to sell is dependent on risk reward. This one happened awfully fast, but as soon as this closed, I was like, yep, it's probably going lower, but milliseconds later, it's all the way down here. So nothing I can do about that. But now really, buyers need to get all the way back up here to look convincing. So if you are going to sell, I think you can wait. This yellow dot means that they basically tried to fight back here, but they still closed it bearish. So if you look at the indicators, price just dropped, but look how volume tried to hold for a little bit and then dropped. That's what this says. It says there's divergence between price and who's doing most of the volume. Is it mostly on the bid or on the ask? But it's relative to range. That's the difference. Because volume delta is just like, are there more hits at the bid or at the offer? Like, are they lifting the offer or are they hitting the bid? But this is saying that compared to how far we're moving. And then, like I said, I've got the % R here, which is a really pure indicator on Renko, because the math is very simple. It's just looking at the high versus the low and where the close was compared to the high and the low. Well, in Renko, the close is always on the high or the low. So this line is going to be all the moves are going to be 45-degree angles. See that? Because it's either at the high or at the low. And so you can just look at the trend and whether or not there's divergence. See this? I didn't before, but that is a sign of weakness in price. It was not present. Oh, maybe it was in volume, yeah. And we were underneath the purple line. And if it's super bullish, we should have gotten above that. See, this one got above the purple and the white. This one got above the white, but not the purple. It also did not touch the blue Bollinger Bands, and neither did this one. So all of those things are primarily just like details to keep an eye on for me when I'm trying to decide if I want to stay in a trade or not. Because that's the kind of thing, like, I didn't actually see it, but I had an intuition here, just by knowing how to read the algo, that I should have seen a breakout, and we didn't really get one. And that's why I said I would drop at least a third there, and then I would have stopped out here. But there was, even though I didn't see it, it's there. Like, there was divergence on the indicators. And there was no volume aggression at the highs. But like I said, I can see that here too. So it's just many ways of looking at the same thing. Right? And if you want, well, what I tend to do is like, I have a basic like pattern I'm looking for, or a few patterns that I'm looking for, like get under a pink bar with volume and price, as well as under the dotted line. But if I can also see evidence that the indicators are going in my direction or are divergent, suggesting that the other direction's weak, it gives me more confidence with the trade. The expectancy improves. And again, the only problem with shorting this, because this is technically a short, but the target's right here. So you can do it, and it probably works. But price might come all the way back up to here and still be bearish. So what makes more sense to me is actually joining the ask here. And then we just have to put our stop up here at 58. I've got it, the brackets set up so that like, that's like I can't make it higher is the rule. I can tighten the stop once, but I can't stretch the stop more than 56 ticks. Because that's just too much risk for me. And so I kind of estimate, like, where do I have to get into the trade to make that work for me? And then I'll go up and adjust it. Now, they might stop this, right? I might have even done a little bit early. But oh, did I do this wrong? It should be above this. Shit. I do have to move it. Sorry, guys. I put it in the wrong spot. That sucks. They're going to get me anyway. 58. Okay, it's right. But it looks like it's going to stop anyway. But it should be above this high. That's what I meant to do. So if it goes to 58.50, it's done. After just saying that I can't move it twice. The rule is I can put it where it belongs, and then I can't move it. Helps if I saw 58 and thought that was the high, and it was. I didn't measure. So I could have gotten short anywhere in here. But what I really wanted to see was for them to defend the dotted line and then roll to the pink line. So I want to take profits like before 38. So 40 makes sense. And then if they want to pay me more, that's fine. But I'll just hold a runner for that. And then since assuming it works, it'll be at max account value, and then we'll have to be vigilant again. And now they could just rip this higher. Right? You can always be wrong. And this is technically at support, old support, so. And this whole area here was poorly auctioned. So it's very possible that we're coming back up there to retest that. But usually, if you have the direction right, getting a triangle on a bar where the line is below the dotted line, the yellow line gets below the dotted line, and the yellow line is below the low of a pink bar, it's not always going to work, but your expectancy, it's not really expectancy, it's just, it's a decent place to start. But if I would have gotten short down here, this stop is pretty big. So I waited a little bit. Could have waited longer. I can technically add to the trade here. And just, as long as I put all my stops there, that is allowed. But only if I was planning on having that much risk on. So in other words, if I intended to do 4 here, but decided I didn't know where I wanted to get short exactly, I might do 2 at first, and then add 2 right now with like a 2-point stop. And usually you're going to get stopped out. Sometimes you don't, and you get a huge risk reward. So, and like I said, I do not move it. If they hit it, they hit it. And they probably will. Because it's just not bearish. That's the problem. Like, it's shorting NQ is hard. Yeah, so that's all right. So now I'm not at the account max. So now I can be a little bit more flexible with holding positions. I can hold runners, stuff like that. Now it's very possible that they come up here, sweep my stop, and then roll over. That happens all the time. So get used to it. But the only thing you can do about it is get back in. And you have to be disciplined enough to like decide how many times you're willing to take that trade. But it is just normal. So they overcame that divergence and made higher highs than the indicators. So it does not look bearish. But you don't really know. If this is just a pullback and then it traps back in, it's not wrong to buy that either. I just saw this, and I know that often you get this. Sometimes you don't. All the way back to highs. And this is why you don't mess with the stop and think like, oh, maybe they're going to go 5 points higher. Like, nah, pick a spot. But this makes sense because this was so fast and illiquid. I should have expected them to come back up and re-auction that. My mistake. Oh, I didn't see this too. We had ring, pink bar. Usually, if there's no pivot over here, the next swing low followed by triangle up is usually a good skill. Damn, I missed that. These can be reversed too. It can be ring triangle up on the second one or on the first one. And then you just have to wait for the second one. I missed it completely. I'm good at seeing them when they're on the second one, but I forgot that you can flip that. Totally forgot. That's too bad. That's probably why it didn't work. So we had a big volume candle with shifting volume up. They came down and they could not get below it. It just happened to be that this triangle got volume below the pink one and the line, but they found buyers right away. So I got short in here, if you remember. I didn't, I think. Or maybe I got it here. If I might have done it here. Now that I look at it, once you see this, I'm pretty sure I know I'm wrong. Because this one can be, with this diamond, this is just like a purple bar. So that is actually a long signal. But with the ring, you need support here, or you need to wait for the next triangle. I just totally missed it. And that is part of the challenge of trading both directions. If you get really good at trading one direction and just looking for like a handful of signals in that direction, you're probably going to make more than most of us who try to do this in two directions, because that's exactly what happens. Where if I was just focused on, hey, this is trend A up, I should only be buying, which is fine, then I might see that setup. But the reason I didn't see it is because I was seduced by this move, thinking that we might get another drop. And I thought I had good enough risk reward to risk $400 on it. Okay, so we do retrace this. Nope, we got back to where that volume was. And then they're trying to reject. So it might be done, but there's no divergence here. So nothing for me to do. You'd have to now get under this dotted line and then reject it. If we can get over this, it's bullish. Because as I explained yesterday or the other day, the stars, the bodies of a star are basically the same thing as a purple or pink bar. And since getting over purple bars with volume and price is usually bullish, I can also get over the body of a star with a bullish bar. In addition, something I figured out just yesterday is if you have a diamond on the outside of the bar, which indicates high volume, the bar before it also acts just like a purple or a pink bar in this way. So I might get an opportunity to buy here. Let's see if they can push it. I don't like that I've got brown here, but that's usually bearish. But if you see, if it goes brown white like this, or brown green white, like green white, that's usually bullish. So I could have seen that too and kept me from selling. But if this turns white, it's not bearish. Although, unless you beat it. So like this, they got under it and then recovered it. This one now is here. But see how we're trading over where it was brown? It's usually a sign that it's bullish. Unless they reject there, then maybe not. But assuming we do push here, on the candle chart, we are at a likely pivot. Monday's highs have not been breached on NQ. Not even close, really. But we did clearly get over the value area of this entire pullback. So they are threatening a push to highs. If we get back under, let me redraw it. It's probably the voodoo range level. 14,432, if I had to guess. Yeah, we're getting closer. By the time this lines up with this, we're going to know if we're above it. And we probably will be. But if we drop underneath this and reject 14,432.50, it could come all the way back here. So, because this is just a big value area. Did we have divergence? No. Darn. So you can see the percent R on a candle chart. They're not all 45-degree angles. It's wiggly. And the bottom is range versus volume. So it's saying like here, there was bearish divergence, lower high, but higher high on price. And the result is pullback. Now you don't know that until this point right here. But then you can get the pullback. And then here, lower low, higher low. No other divergence other than this being the lowest point. So on a higher time frame, there's probably divergence. There it is. Higher lows on the indicator, lower lows on price. All the way back to here, which is exactly where we are. Makes sense. So we just worked off that divergence more or less. And that's how these things work. Okay. Oh, here we go. I was like, come on, let's go already. All right, another X kind of high, but we can join them in a minute if they push here. We do have divergence on the percent R, but that's primarily because they ran into the zero line, which you can't go higher than. The price can keep going, but percent R just gets as high as it can go. But it is technically bullish again. I just want to pull back, and I probably won't get it. All right, we're going to do 2 here, but since I can, I've got room now, I might add 2 more. Let's see what they do with this. Okay, my stop goes down here. Gross. Underneath that. Really, we want to see this dotted line hold here. That would be ideal. And then I got to take profits a little bit early because I got in late. So let's see what they do. Yeah, that's fine. Oh, they might take it. But again, no bear bar got a volume dash underneath a pink bar. And it's bullish. So, reasonably good chance it goes higher. How high? I don't know. There we go. We'll see if we can hit 76. I'm hoping that they hit the high day and we just like collect liquidity. And I'll just take like three points. That's the hope. And then if it goes higher than that, I got a runner. And I'll hold till 90 something. Go. So pink is a little bit concerning. Because it means if sellers start to fight, the buyers might give up too. But at the moment, sellers have just given up. Probably assuming that the high is going to get taken. But they're going to need some follow through here. We have not yet retraced this purple bar. Once we do that, it's neutral to bullish. But the fact that it's the high of day, I mean, you'd think it gets broken. All right, let's see if they fill me. Otherwise, I may need to... Oh, you bastard. Come on. Oh, no. Come on. Really? I swear it traded there. One contract. You bitches. Didn't fill me. Oh, that sucks. That's bullshit. That's what that is. I've had it there forever. Or did I move it? No, I don't think I did. All right. The stress of losing fake money. Okay. I forget sometimes that this is just an eval. All right. Back in the green. Not yet at max. But it's going to get to max account value quickly here. And then we have to start being conservative again. Not there yet. So in other words, if it drops now, it doesn't matter. Because I've already gotten my max account level hit. And so... it's just the same. It's 4,500 from that max level. So I mean, I guess it does matter, but it's not going to make it worse than I was before I took this trade. So, which is really the problem that you want to avoid. You don't want to be taking trades and taking risk that actually, even though you won the trade, it makes it worse for you. Whereas here, I'm not at max account. So value, so I'm not adding, or I'm not taking away from my cushion by holding. I already knew my cushion was 4,500 from 150, 200. I think it's right about here. So if it goes much higher, I got to start being a little bit more conservative. But this is no different than where I was when I took the stop earlier. When it comes to where my max account drawdown is calculated from. And if I was willing to take the trade then, I might as well hold it now. But if it goes up 20 points from here, those 20 points I don't want to give back, because then that's just as bad as taking a 20-point stop, like shorting this. So, which I wouldn't do. Or buying the very high, maybe is a better way to say it. Because it would hurt you by going down. So you have to ask yourself, if I would have bought that high, am I holding or not? And if not, get out. The dotted line was way back here. It shifted way up. They went a little higher. Sellers are trying to neutralize it. It's just mean reversion traders seeing if they can get buyers to give it up. If they can't, they're going to quit. Oh, they shifted volume down. See that? The dotted line dropped. That's not good. They have to respond here. Okay, good. I was going to say, if you see volume shift like that and they don't buy it, but there's a problem. There's volume going up, so now it should go higher. I'm ready on the cancel button in case someone comes in here, because I don't want to be holding if the buyers don't respond to that volume shift. The hard part is you don't see it on this time frame because the volume shifts are happening within this candle. I have other time frames where you can see it. See this little dip on the 8 tick or 7 tick? And then they got purple bar, blue dot, or purple bar star, and they got above a purple bar. It's bullish. But this is a tiny time frame. It's hard to make decisions with this, but you can. I'll show you. We will exit the trade with the 7 tick. Oops, sorry. That was noisy. Oh, maybe you didn't. I think I turned off the... Let me check. Oops, sorry. Then I hit the mic. Yeah, I turned off the desktop audio. Okay. So as long as this is low, then you didn't hear it. As I say, in my headphones, it was loud. I got like an advertisement that there was a new download available for my mouse. What's it called? Update, I mean. All right, so I'm shooting basically for the voodoo range level at 96. I am super happy if we get that. It might go higher. Man, I should have held those calls. I sold them before lunch. So I'm pretty sure we get to 96. But I don't know if we go higher than that. See how far we are from developed volume? So it's pretty natural to come back in there. But these aren't pink bars, so that should be fine. You'd expect, since buyers worked through sellers here, you'd expect them to show up and defend it. They did before. But again, I got to keep in mind that I'm at max value here. So I don't want to give up too much. Otherwise, it's like I just took a stop from the point of view of my trailing drawdown shrinking, which is the primary issue with these evaluations. Yeah, if we beat this, like 75, it's suspicious. And we're right at the let's see. I think Monday had, no, Tuesday, had some data. I forget what it was. Inflation, maybe. We're right at the high after that data, whatever that was. So it is a reasonable spot for sellers to try. But I really expect these two to get defended. I could be wrong, in which case I basically just took a stop from the highs, which sucks, but I don't like the purple bar. Unless we immediately beat it, then it's fine. It's almost looking like they're gonna sweep back down here. Well, that's what sellers think anyway. I'm just kind of surprised they're even attacking it. It should not be that hard to beat that purple bar. But once again, they came right back to either where the dotted line is or where the dotted line was. And we should find buyers at one of those levels. It doesn't have to be exact, but since that's where most people got in the market, it's where the majority of trades were, or the mode anyway. You'd think that if there were buyers then, they're buyers. If buyers still control, there'll be buyers there now. So we need to break this high and push. Otherwise, we're going to be divergent. This is a nice big volume wave. So it shouldn't have any trouble. Okay, we should get a push here. I should get filled. I could probably go higher. It might go a lot higher. Targeting is tough. Realistically, 96 is pretty real. Is pretty good. But it could go higher. And you just don't know if that's going to be in a straight line or a very jagged one. Tempted to push this higher. Let's go to 95. Because I have a feeling this might just like slip. I just don't know when that's going to start. Let's put the stop to like 76. And just see if I can push this a little bit. No, don't fall. Okay, we might get trailed out, which would suck. Yeah. They need to show up here. It could take my stop and go higher, but I don't want to give up 20 points. So we'll just see what happens. Wow. They're definitely going to take it. Okay. Still, it's not at max, right? But I made a new max and gave some back, which sucks, right? So I would have been better off taking the trade out here. But I believed that we could get to 96 and had a aversion to giving back more than 10 points. So is it probably going higher? Yeah, most likely. But it may need to refuel a bit, is what I see. And I don't want to hold during that refueling, even if it means giving back a little bit of profits. I don't want to mess with that trailing drawdown any more than I need to. So the last thing I want to do is be holding something that's going against me. So, like I said, I realized the max account was a little higher, so I could have been a little more vigilant and exited sooner than that, but I thought there was a reasonable chance that it did this. And it still could. But, I mean, you got to pick a spot. So, I could have done 72. But this purple bar should have been pretty easy to get over. And they tried, and they closed it bearish. So, I'm not going to take any chances. Because that star suggests someone aggressively tried to sell it. And there was a shift in volume. And there's divergence again. And divergence here. So, it doesn't mean I have to immediately sell. But I'm not just going to sit here and hold when I see all that. Now, if we can get below this low, then it's hidden divergence to the upside. And that would be bullish. I don't think they're done. I just think they might have to settle down a minute. And again, I could be totally wrong. Make sure I don't have any orders sitting in there on accident. Always a good habit to hit that cancel and flatten very often. Ah, star, star. Star down, star up. But again, the X is very high. How bullish is this? Not that bullish. Not a lot of momentum. Like, price is rising, but like, you can even just kind of feel it. Like, it's not chugging higher. It's like sputtering a little bit. And those X's, they can work when it's really pushing. But other than that, they belong at support. Because it's a sign that there were sellers in a active area and buyers like took them out. And in that case, with the star, they took them out aggressively. But just because there were sellers in an area and now there's buyers, it doesn't necessarily mean we're going higher. But what it does tell me is it gives me a location to watch, because I know buyers got active there, probably to save the trend. But if we now get under that, I don't want to be buying. So had I not exited, my stop would go like right there. Because if we give that up, it's done. Wow, within 4 points, they slipped me under with 4 points. And like I said, that is the frustrating part about trading these evals, is you have to consider your trailing drawdown. Yes, you will miss a bunch of these little capitulation moves. But the important thing is you don't give back profits. It makes like these breakout trades really hard to trade. Because if this happens, like, you essentially got long at the highs. Because your trailing drawdown is fixed to calculate off of whatever your high value was in the account. All right, so they did hit the voodoo range level. Again, that was my initial target. but they took me out by 4 points when I trailed my stop. I think they want this. They want to go up here, but they're not going to be able to do it in a straight line. So we're going to come back and they better not fill this. If they do, we're in big trouble. But for now, we've gotten plenty of candles up here. The last thing you want to do is fight. But if you do want to short, this is a good spot to do it. It's just, what's your expectancy? I mean, unless you really do think you're going to come back here, then do it. I think this is probably going to hold. But no one knows. The long should be easier. It's just a question of, do they have any momentum left? Because, I mean, look at all pink bars. It's just sellers giving up. Like, they just capitulated right to the voodoo range level. Like I said, it's frustrating that I put my stop under this one. Had I put my stop under this one, I'd be fine. That's how it goes.
I'm having trouble hearing. Can you say that again?
Alexa, go home. You shouldn't be listening. I didn't say your name. Getting a dot like this on a little pink bar means that if we break under here, oh wait, I'm wrong. The dotted line down here is going to protect them. But if they can break down, they could get a seller coming in. But this is going to be support. So, not worth a trade. Normally, if you get these little bars that are pink and it has a dot, and you can get under it and close under it, like if this bar closes bearish, it's going to go down. The problem is most everybody got involved here, right where I stopped out, or trailed out. And so they're going to defend 9 times out of 10. Like that dotted line, when it stair steps like this, that is support. You can see, though, they do test underneath it. So I was just a little bit too conservative. And should have put it a little bit further. You know what? The fact that this is purple and pink right next to each other means that they were likely to test both sides. I forgot. Just like this. So we are very likely to get above this, but it might pull back after that. But you're usually going to break both the low and the high when you have pink and purple. Because if you think about it, that what it means is that price rose because of illiquidity, and then price went down through the same area due to illiquidity. So the market wants to get up here and test for real buyers, or real sellers in this case. And then it wants to come down here and make sure there's still buyers there. Which direction that, like what order that happens, we don't know. But I'll tell you one thing, if they can't break this high, that's a problem. Because that would be very normal. Wow. But note, even though I'm saying that there's a chance that it could be topping here, I'm not short. There is no trigger to actually short. And the risk reward's actually horrible. Unless you think that there's going to be no buyers here. I don't have any reason to think that. If I were still long, I'd be getting out, personally. I don't like that they can't break this. That's super sus. That should have been easy to break. Let me just check the 7 tick. Wow. So repricing here. Everybody overpaid. Sellers tried to punish, but they can't get underneath the dot. So 88 on the smaller time frame is where the bears need to get to have any chance of cascading. So 88 right there. So get a bar to close under that. Maybe you got a chance. If they go down there and they bounce it, it's probably bullish. But you can see the divergence on volume aggression is real. And pink, 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 purple. It's like this is just an illiquid, what is it called? Like capitulation. Everyone just kind of gave up. And then now we have like real participants being like, wait, value is way down here. Why are we up here? Like everyone went into like a daze for a second and just auto bought. And now they're like, wait, value's down here. That's where everybody got involved. But yet price is way up here. So mean reversion algos should be trying to get us back here. And then when we do get back there, we would expect the momentum traders to buy the dip again. But you never know. Now look, we do have a cluster. And I mentioned earlier that when they cluster like this, they're less strong. So if the buyers don't show up here, it's probably time to start shorting. I'm not going to try to guess the high, but I will say that this does not look promising for buyers. Having capitulation with pink and purple and not being able to even get a tick above that, that's weird. We do have this support down here with one dot. That would be a spot, whoops, that they might test. Let's put the line there so I get the number. 45.25. It's a pretty big drop. All right, so they came back to that line in the sand and they're trying to buy it. Purple bar, do they get a pink? And we can watch for a dip and a rip if they get it. See, they should be pushing, if you're a buyer here, trying to defend this. Like, let's say you bought a bunch of NQ here, and you see it slip up, and then slowly bleed. You're going to be like, I got to buy this, right? If you're a big institution, and this is the level that you decided is, like, where you want to belong. Like, if they weren't finished getting their orders in, they should be buying it in here. And when they're not there, all the momentum traders that followed them in are like, shit, there's no one buying. I don't want to be the last one to buy. And then they short. Interesting. So they got another divergent bar. And then the pink one with the star. So this might rip higher. I mean, I guess we could try it. Should we let's do it. Like, that's pretty strong. Let's see if we can, and then we're going to put our stop right there. So it's going to be cheap if we're wrong. They basically have to close this bullish. Otherwise, I'm not interested. And this is just a scalp, so I want to move this in case they should break the high, but oh, I see. It's 14,500. Nice. That's why it got stuck there. Perfect. So that's just a level that everyone was selling because psychologically it's a round number and the big figures just make people cluster their orders there. And like, yeah, the, what's it called? Not so much for NQ, but for SPX, those numbers can be common for big options orders too. So you'll have like open interest there. But that's not quite as relevant on NQ as it is on SPX and ES. Wow. I expected this to go pretty easily. But I'm not going to move my stop. I mean, nothing's changed. I just didn't expect them to fight back. So we could probably go a little higher because all the stops are up here. The sell stops are up here. Like those who shorted will buy to cover right above 500. So most likely I could get filled at like 01, 04 maybe. That wouldn't be unusual at all. Just to see it go zoop. But it kind of already did that. So I don't know how far it's going to go. But here, I have an idea. No, I don't want to mess with this one because it could go to the high of the week, which is like 14,570 or something. Probably not straight there, but that could be the target for the day. There's still another 2 hours, so if they want to keep going, it can keep going. It should not stall here, though. This is not looking promising. It'll be a small stop, but not looking good. Yeah, that high should be really easy to beat. And honestly, if it came back to break even and you don't want to just exit, I don't hate it. I'm going to leave it, but because it's a small stop if I'm wrong. But that's not what I wanted to see. I wanted to just see. Yeah. Now everyone's figuring out that it's not very strong. Okay, so see how I put my stop a little bit below this just in case. Nah, they got me. Now let's see what they do. Wow. Not again. That would suck. Wouldn't be shocked. So we did get underneath that level. So I'm not going to buy it, but they may just have stolen my stop only to run again. And that is just how it goes. So I could technically take it, but I'm not going to. Not because I took the stop, but because I did not expect this fight to happen if it's bullish. But I could be wrong. They might have just had to refuel a little bit more and then they go. But I feel like that kind of it doesn't bode well for the move higher. Even if it does take the high, I don't think it has much energy left. It really shouldn't have had any trouble. If anything, I think this is probably a short, but I'm not going to do it. Because like I said, I'm fine with taking the stop, but I know that works often. So when it doesn't, it's like, I'm not going to play along with this. Sometimes it's just variance, but when it doesn't work and you know the win rate's really high, there's probably a reason, but not always. See how they're just kind of consolidating in here? So again, the red is defending. So buyer came up there. Sellers are waiting for him and defended. If we beat that, that's usually pretty bullish. But I'm not going to buy it with expectancy this small. There it is. All right, so they did get it. It's probably going higher. But I don't have risk reward to try. And again, that X is very, very high on the channel, which means that this is still very dangerous to trade under here. So the one positive is if you did want to get long, you could put your stop right here. But I don't really feel like taking another 7-point stop. But that would be where you get long right there. And then you put your stop like 86. And when you're right, you get 10 plus, and when you're wrong, you lose 7 or whatever. Because like I said, that red, when it's bearish, usually continues. And so the fact that they beat that, they're at least trying. And the buyers have all the momentum. But again, the divergence is pretty severe. So that momentum might be spent. And I'm not going to risk it. We're probably coming back to here, 77. What I don't know is if they're going to come up here and steal stops first. It's really hard to fight these trends effectively. Because, I mean, look what happens if you short the red, right? And you get like 7 points, and then it comes back on you. And then you take this one, it gives you 3 points, and potentially, like, there's just not a great way. I mean, unless you just want to wait, you got to put your stop right here. And every time it comes up, be short and take 3 points. Try to get 3 points again. That might work. But if the whole point is to try to get that, then you can't just exit at 3 points. So I don't have a great method for like finding the top, but I'll tell you that this is what they look like. But there's no way to know, as far as I know, whether or not we're going to sweep that high or not. And more often than not, they will. I know that. Just like this low gets taken. And again, I thought I positioned properly that I would not get flipped like that. But once again, within a couple ticks, they slip past my stop. And that's going to happen. This wick was just longer than I was expecting. You know, because even if you put it where like all the volume was on the down move, you still get hit. So pretty tough. And I'm just glad I didn't buy here with the breakout traders and instead bought the deep pullback. I'd much rather risk 7 on something like that than risk 15. Wow, 2 boxes in a row. So the boxes are basically saying that like the area is heavily contested, and it's a sign of like a little like mini reversal on a smaller time frame that occurred at a spot where there was like a lot of interest. It's not always a trade entry, but if you get them and then you get behind it and they release, that's often something you can follow. I can find one quick. They show up pretty often. They're blue squares and yellow squares. We'll look for it later. I'm curious what they do with this. On the higher time frame, wow, aggressive seller at the top, at the high, and then an X very misplaced. So again, getting under him, 82, causes problems. Oh, I see. That got put in when I got stopped out. Okay, so that's this move here. That makes sense. If this gets beat, they're probably not in charge. So this was technically a valid entry. You had a purple bar. You got above it with the yellow line on a bull bar. And your price got above where the dotted line was. So that was also an entry that I didn't take. So any of this pullback would be buyable with the stop down here. But again, my expectancy is just questionable. It usually works though. But by the same token, getting under purple with a bear bar here and underneath where the dot, oh wait, but purple was here. They have to get down here before I can use this purple as a linchpin. So we need to trade all the way down to 75 or get a new purple bar to beat like this one. So this one, the dot was up here. So get a bear bar. Oh wait, am I doing this wrong? Pink would be getting under pink. So it would be for bull, it would be this one getting over purple. For bear, it would be this one getting under pink. Actually, it's this one. So this is technically sellable then by those rules. Because the dot was here, we're below it. And we've gotten the yellow line below it right here on a bear bar. I guess I could try it. And then we're going to have to put our stop at 96, I guess. Oh, this is gross. Let's see if they can hold and accelerate. Otherwise, I'm probably going to ditch it because I just don't like it, even if it's valid. Will they hold that dotted line? It's technically valid. Okay, they shift it down. How do they respond to that? Nice. We want selling. All right, so stop goes, I mean, high day makes sense. And then we said 77. Yeah, so that's fine. We'll take 10. Again, it's way harder to fight the trend than it is to join it, so my expectancy right off the bat is lower. But I've got lots of signs that this is weak. You just don't know how many times it's got to bounce before it finally falls. And I am getting involved kind of low on the channel. Like, I'd prefer to be getting involved selling up here, because then you could take profits here, which is like, this move is natural. This move that I'm trying to get is a little bit unnatural. So the better sell would have been here, but I didn't see it until after that, so nothing I can do about it. Now, when it does work, I'm happy to hold the runner because sometimes you do get a pretty big flush, but that's the exception, not the rule. So you want to be prepared for a bounce. And really, I want to see some speed come in here. I want to see them like pile on to the selling. Like if it goes too slow, I will give it up. Assuming I'm in profit, like I am. I mean, but yeah, trading counter trend is just tough. So you want to be very selective and very nimble. But it's one of those situations where it's like, well, it's set up. I know it needs to get under 82 to really accelerate, but if it does, I should get at least 10 points. This would be another situation where if it comes back up, I could technically add and just leave my stop at high day for the add. But you'd have to be prepared to take that extra risk. And like I said, this all started because we saw pink followed by purple, and that should have been easy to clear those stops, and they couldn't take that liquidity. And then we saw divergence started back here on the indicators. So and then pink all the way up is a sign of capitulation. And then, like I said, you would have expected one of these to work, and they just couldn't get it going. And so when it triggered me short, I got a chance to take it on a pullback, and I took it. But you can see the algo's not going to get me short at the top, but it's going to keep me from buying over and over again into a market that's weak. And then gave me an opportunity if I decided to take it, which I did. And let's see if we can get paid a little more, please. It should go to 77. I said 77. These bitches. You know you want to fill it. I should just move it down just to... Oh, really? At this point, you might as well move it down to like 70 because now they're just going to rip right through it if it goes. That's annoying. Oh my goodness. So irritating. Second time that's happened. And again, the difference here is, wow, that's frustrating. Had I gotten it a little bit higher for the entry, that 10 points is filled, right? It's not wrong when you see it struggling like that, just to like move the limit and just kind of getting out. That's okay, but embarrassing. So we'll see what they do. If I had a lot of contracts on this, I'd probably just exit and be upset. But with an eval, that's, basically paper trading. Like, only way I'm going to pass it is if I actually make money on it. So might as well just see what happens. But honestly, right now, this move that I was looking for already happened. So really the best thing to do is probably to move this lower, because if they do hit this, it's just going to fly right through it. So there's almost no reason to take any profit here anymore. It's either go a lot lower. In fact, I'll show you. It's just going to slip right through 77. And it's going to go to like 65 if I'm right. Or it's going to go back up. We're not going to add to it. We're just going to let it play out. But most likely, had I gotten filled, I'd be out of the trade. And that's very important. But the fact that I didn't get filled and I'm not at max account value, I'm just going to let it play out. Because I already know where my max is. My max account value has already been hit. So, like, I need to make that back before I really worry about, like, giving back profits. Because the amount is determined based on that max account value. So I don't have to be super stingy here, but I also don't want to... Oh, there we go. See, it goes right... Oh, didn't go right through it. Wow, it stopped at 80 again. That makes me want to exit. I did not expect that. That was a pretty big drop. And they bought it up again. That looked pretty strong. But like I said, I'm not gonna... They can do whatever they want on the DOM. That's the thing. Like, if you want to trade that small of a time frame, feel free. But the algo says it can go lower. I'm gonna stay short. If the algo gives me a buy signal, I will exit. But if it does, if it flushes again and they start buying it, you got to take profits then. Realistically, I can probably move my stop to like 97. In case they just like rocket it. Which we've all seen. So see how that dotted line they're working on it. That's where most everybody has gotten involved over the last period, so but it develops over time and it's shifted down and now they're trading above it. So based on the current period, people are overpaying to push this higher. Which is fine if it's going higher. But if it's not, they should hammer it. That's a pretty strong signal there. Purple bar, blue dot is pretty bullish. So if they give me the triangle up, and I'll probably just exit it for a small loss, which blows, but it's hard to fight the trend. We just want to see them give up. And like I said, they tried, and someone showed up there at 80, and now this is everybody like responding to that. So you gotta trade the market you're given, even if I think it's weak and overextended and all that stuff. If there's no sellers, I don't want to be short. I can't believe they missed my exit by like a tick. Ugh, gross. See them defend it? It's going to be green, then they're going to go. that sucks. 2 in a row where I was within the first one. I was within a point or two. Second one was within a tick, and then the other one would have paid me, but they stopped me out within 3 points of the swing low. So there you go. There is luck involved in trading. You can have a rough run. And I mean, like I mentioned earlier, the best way to deal with that is to be more selective and decisive when entering the trade, because all of those moves would have been wins had I had just a little bit of a better entry. So just being a little bit too much either indecisive or like too spontaneous. Yeah, this is probably a long, by the way, but when I exited the short, it's probably a long. Because if it was bearish, that move, that goes lower. And it didn't, so. But at this point, if I get in now, it's going to look like I'm tilting, so I'm not going to do it. Even if I do think it's going higher. Speaking of which, I think I'm going to run to the bathroom, grab a new drink, because I know this is gonna break out, and I can't entertain buying it without looking like a degenerate. So give me 2 minutes. I'll be right back. There we go. Realized I didn't have the microphone going for a second there. Let me make sure it's still good. I think it is. It might be louder. My apologies if it's too loud. Let me know. Yeah, that's tough. Pink followed by purple. Expect it to test below and above in general. Like, I don't love it, but you could buy it. Yeah, let's do it. Why not? Let's be a degenerate. Let's see if we can get 10 points. And the idea is they've tried over and over again to flush it, and they just can't do it. So I suppose once again we could have waited for a pullback, but it's relatively clear to me that we're going higher. At least we'll have something to talk about and review if I'm wrong. We're sitting right at the voodoo range level, so it will look pretty silly if it falls here and I was long, but like I said, it feels like this should go. And we've got purple, blue, purple, blue. That's... And then, oh, here's that blue square. So if it comes underneath this and then bounces, that's actually a long two. All right, so yeah, I think I can get to 05. We might have to move this one. I'm not going to miss it 3 times in a row. I still can't believe how close that was. Twice like that. But like I said, it has a lot to do with marketing in rather than like limit buying or limit selling like on the order book. Because again, one more tick and that's a winning trade. They did not take the liquidity. So if they come up here and hit to like 01 and then flush, we're just gonna exit. Remember, I'm not at the high of the high water mark, so I can be a little bit more aggressive without changing where my liquidation point is. You want to trade a little bit more conservatively. Wow, are they not going to take it? They got to take it. That's weird. Yeah, as you're pushing higher and higher on the account balance for these evals, you want to be a little bit more conservative, especially with holding as it rolls against you, because that's going to change. The higher your account value is, the higher the level where you're liquidated at. So the higher your max account level is. So since I was up like $200, a max drawdown is like 15.5. No, wait, it started at 150,000 and I could have lost 4,500 from there. So now I can lose 4,500 from the max of 15,200. So I've got 200 less of a cushion than I had when I first started it this afternoon. So rather than having 4,500 from my max, I now have 4,300 from break even, from 150. Right, so I need to get it back up to 152 basically, and until I do, I can hold runners and do all those things because it's not going to matter. My liquidation level's going to stay there. But once I push to a new level, there we go. We took the liquidity. Now let's see what they do. This is where it gets tricky. How high do they push it? But yeah, the closer you get to your target, the more conservative you want to be, assuming you're trading at the max account level, basically. You just, the only way you blow these up is by giving back beyond what the trailing threshold is. So you just don't do that. All right. Let's see if we can get filled here this time. I'm watching you. You're not going to leave without filling me this time. Okay. All right. So back in the green. But again, I'm not at max, so I can hold. And now this sucks. We've got 3 pink bars in a row. So if we get under this, if we close under that, it's pretty much done. So we can move our stop to like 95, honestly. It really shouldn't go under that. It might, but if it does, it's not going to go straight up. And that would suck. But there's also a chance that it just rips. But the 3 pinks in a row is just, it's just a lack of selling. It's like there's no sell pressure at all there. Just no supply, just whoop. It's not bearish, it's just they need to defend it. It's gonna retrace. I guess I should put it at like 90. Let's be realistic. I'm not gonna let that happen again where I get 3 points swept. We'll put it under this. Sorry, I'm getting over a cold if I'm clearing my throat and stuff. It's pretty much gone, but still a little congested. My apologies if I sound all nasally. So this little bounce off the voodoo range level, if it wasn't pink, pink, pink here, would be really strong. That's usually exactly what they do as they're stair-stepping up. But you can see with the dotted line where most of volume was. See how that hasn't shifted up? There's been very little volume done up here. So if there's any sellers, they're going to contest this and be like, if you really want to buy this, why aren't you putting as much volume in up here as you did back here? And then they'll push it down. And then if the buyers are like, thanks for the cheaper fills, then that goes higher. But what I really got in for was the rip, dip, rip, like sellers giving up, capitulation, 20 points higher in no time. That was practically a breakout buy here, right? I mean, it was early, but it was anticipation of a breakout. So when you're buying it with momentum like that, they need to keep up the momentum. So like if I see divergence here and like weakness or the speed slows down a lot, yeah, I might be, it's probably a good idea to just exit and get a dip. So on the smaller time frame, you can see they're repricing the gold. So everybody bought too high, like they overpaid, and then this guy showed up and no gold, and so they beat that, and immediately it takes out all of these breakout buyers, putting them off sides. So what happens next, it tells you if it's bullish or bearish. That move is hard, but what the easy move is when they hold here and retake it, now it's going to go higher, and you can put your stop under this, because if they give this back, it's bearish, because there were buyers there, and if they're not anymore, there's probably a reason for it. So on the smaller time frame, it suggests this high is going to get taken. But again, you can't take something, even though the markets are fractal, you can't say that, like, since the 7 tick says it's bullish, the 15 tick must be going up. Like, no, not necessarily. Usually, but not necessarily. If they're both bullish, then yeah. And of course, the higher time frames are also bullish, so that makes fighting the trend even stupider. Although I demonstrated with, you know, with more precision, I could have gotten 10 points, but you could just see, I mean, that was a pretty good setup, and I just didn't have a perfect entry, and that's all it took. Like, that's what I'm saying about, like, the shorts always look like they're going to turn out really good, but the moment they stop working, like, it's over. And then you're lucky to even get out without losing. That's the problem. At least with when you're following the trend, there's a relatively good chance that you're going to at least hit a point where you can take some profits. And then if your runners stop out, you know, okay. But you barely even get the chance to get to that point when you're trading against the trend. So that's my issue with it, is you're going to struggle for those first 10 points. Okay, so see how they've retraced? Again, all the gold bars got pulled. We got a retracement. Why can't I? They tried to get under them, and buyers showed up, and the result is rip back through them. But this one was not gold. So look where the seller came in, right there. So let's see. I don't know how much that's going to affect us here, but interesting. The fact that this is also bullish makes me think it's not going to matter. Like, they probably just get a little dip and then rip. But if you want to explain, like, every little move, you can do it. Just have to look at other time frames, and it's there. The real mistake comes when you see something like this and you're like, oh, it's bearish, and then you sell only to see them come all the way back up because the higher time frame wasn't bearish. So if you were only looking for, this is like 2 points, 3 points, you know, it's really zoomed in exponentially from this. So I don't use this for trade entries and decisions. I actually look for big picture, like, patterns here. For instance, trapping sellers. So, like, the dots, we got over the dot, and then it became support, so it's bullish. And on a higher time frame, that's like 3 bars, and you can buy that. So if I see someone getting trapped on the smaller time frame, and it triggers long on the higher time frame, that's pretty good. On the candle chart, we're just now getting into this little node here. So there might be some sellers waiting at like 23 over here, but everyone wants 70 plus. That's what they expect. I probably should have held one of those calls. That was likely a mistake. So, see, I sold one of them early, which is fine, but because I recognized that if they were going to roll it, it was here, that they probably would roll it over here. But then it went a little bit higher and it broke this, and I was like, you know what, that's pretty good, I'm out. Wait, actually it was way back here. I think I sold the first one here, and then we got here. Gosh, I don't even remember. Was it this one? It was noon. noon. Okay, it was here. Is this? Yeah, so it was at 4:32:50. It was early. Let's just put it that way. It was early. Better early than late, I guess, but that's too bad. That's okay. There's always another trade, and it's better. I mean, what I should have done to prevent that is I should have had a better plan for the runner. I had a plan for my first exit and my stop, and I followed that plan, and that makes sense. But once it starts to break out, I need to remember that the market loves to just go as far as it can possibly go. It's just brutal. It'll kill anything in its path. Oh, where's my sell? Let's make sure we have this in a good spot, actually. So just because I'm happy with the gains, I don't necessarily want to just sell. It probably makes more sense to like trail stop. It's just hard with the options because you can't really trail stop. I guess you could by like telling it to buy puts if it got under a certain level, but so I do expect, I'm looking at the candle chart to try to decide where I want to take profits here with the futures. See how we've got a low volume node right here? And we're kind of struggling to get over it. It makes sense to take some profit if they peak up here and struggle. But we really probably break this. And if you look to the left, there hasn't been anything here for a long time. You have to go way back. So if it does break over 75, it could go another 50 points. Like, look, there's just nothing there. Nothing. See that? Yeah, so now on the daily, it's there, but not on this contract. So, yeah, that usually means that there are like people who are mean reversion traders that are going to get gamma squeezed, basically. That anybody in like 3-month options, let's say, sellers who are selling options for yield, they had a plan that involved selling calls as long as we hold under the monthly low or whatever. When it doesn't do that, everybody knows that people buy at breakouts, so they start gamma hedging once it breaks over that, assuming that when it rolls over, they can unravel those hedges and continue to sell their calls. But they don't want to lose money on their delta neutral setup. So like if they've got like a calendar spread, let's say, like they're gonna have to all of a sudden buy to make up for the fact that all of the calls that they sold are now paying out and more people are buying them. So it's the result of all that is a squeeze, and that squeeze can be pretty sudden. Oh, I've got to shift up these voodoo range levels because we didn't have any this high. Okay, so our next level up is basically the high at 59.50. The actual high was put in pre-market. See that? But the market high happened to line up almost exactly with where the voodoo range is. I don't know why that is. It's random, I guess. But yeah, that level, 59.50, is an obvious place to take some profit, but it probably takes that liquidity eventually. I just don't know if it's going to go straight through it. If it does, we can move this to unlock. We could do something like this yesterday's high? How does that line up? Not too bad. What if we move this to 14,369? You don't really know which one to use, but once you find it, yeah, see, that's pretty close. What about 14,432.50? I mean, that's for most, but look at that. So that's probably right. 14,496. What's that look like? Do we have more? There we go. Let's do that. At least we have more levels. So those are potential turning points. They're not like definitely places to sell or anything, but it's just a measured move from here to the high, from the Voodoo range level to this swing high on Wednesday. But you could find, oops, oh, don't do that. You could find other swings that might line up better. Like this might line up pretty good. That's not bad. Look at this one, 200 right there on the volume area high. That's pretty cool. And that says we're actually at one right now. This actually kind of makes sense. What's going on the algo? Do I want to exit? Oh, some people bought, so they overpaid here, but volume momentum pushed them into buys, basically, despite the fact that, oh, and then this guy is really dangerous to lose. So we don't want to trade under 15.5. It probably is okay just to exit here. Am I at, yeah, so I'm at a new, I'm out. I'm at a new high for the account. See how it's above 150,000. Maybe it's about even from where I was, but one way or another, it's getting to the point where you don't want to give back profits if you don't have to. Because had I bought this on a breakout, I would not want to be holding on a pullback, right? I do not feel like this is good value. And seeing these yellow bars, if I wasn't sure if this was good value or not, the yellow bars are almost always proof that it's not good value. It can go higher, but usually you're going to get a pullback first. I will say, when you don't, if you get bar like gold, white, and they don't beat that, and instead it's like white, pink, whatever, and then gold, like it's not pulling back. I can show you some examples of that where like momentum is pushing the market and people don't even care what price they're paying. They just have to be long. It's a squeeze. So you don't know, other than like watching the DOM and price action hints, you don't really know for sure. You can look at the smaller time frame and say like, oh, that's a buy signal, this should go higher. But you don't know for sure if this one is going to be like white or gold. And then if that gets beaten, it's going to go all the way back to wherever the first gold was, more often than not. But like I said, if that holds, or if they don't pull back there, well, then you know it's squeezing. So then you can get involved regardless of what price it is. But that's going to be the exception, not the rule. Normally, this is a sign that we are repricing, and any like, what's it called? Like price discovery is like on pause. So it's not bearish. In fact, it's usually bullish. But if you get out at a gold bar or above a gold bar, you got a really good price. So it's a good place to take profits. It's not always the top, but it's often a swing high or near one. But I mean, they could push higher. This orange background means that for the moment, there's more sellers than buyers in this live bar on a separate time frame. On a different chart, I can show you it. Hold on, let me find it. Where is it? No. I will show you. NQ. Here we go. So on this time frame, this bar has or had more sellers than buyers. And if it closes bullish with more sellers than buyers, it'll or wait, it's the other way around. So if it closes bearish with more buyers than sellers, so see the ask volume versus the bid volume. If it's red and it closes red, it's fine. But if this closes red, but it's a green, and see all these other ones close green, 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 but then this being orange or whatever, if it closes red, it's like there were buyers in this bar, but it's still closed red. But it's going to blink back and forth on and off until this bar closes. And sometimes that means that this bar closes red, but on this other time frame, this bar could close green. And that's when the signal is most useful. And then the opposite of that is the green. So you're going to see green backgrounds like this on usually up bars. But if you see them on down bars, it's a sign that buyers are, if you beat that bar, if you get above it, buyers have trapped the sellers, because it means that there's more sellers in the bar than buyers. So, and yet on that other time frame, it closed bullish, assuming the bars closed on that time frame. So like here, 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 when you can't develop any volume below those, it's bullish. And here's the sell ones, right? And remember, this comes from a different time frame. So here, if you can't get any buyers above this immediately, it's probably going lower. But that's on a very small time frame. So here immediately it says, hey, if you want to buy a dip, this is the spot to do it. And I saw that when we were trading, and that's kind of how I sort of knew that my short was done. So now sometimes they won't show up right away because this time frame close does not match this time frame close. So it's on another screen. I can see whether or not it's closed or not on another screen, but just be aware that even after the bar closes on this time frame, it does not mean that that background color is not going to change. It's dependent on the other time frame, and it's just a different. It's not a regular Renko bar, so the rules are different for how to close the bar, bullish or bearish. I just needed to watch on the other time frame to see that the bar closed. So here, gold, white. If we get under this, it's gonna pull back to probably here, this area. Maybe here, I guess, because that's what the volume was. But I'm guessing back to here. But it's got to get under this. If it doesn't, it's just bullish, and I exited too early. See, getting gold again would be very bullish, assuming they hold it. Like, as long as this holds, it's bullish, but it's fragile. The good news is you could put your stop like right there, give or take. And that means you could buy a dip as soon as you saw some aggression coming back up, but you'd be risking this. And so you'd have to think that you're going to make a new high again, which we should. So we might get that chance. Let's see. Like, what I really want is for them to hold this area and then bounce. Then that means that that's new support, so I can risk off of it. But since I'm at the high, the max account value on this eval, I don't want to be taking aggressive shots like that and like give away my threshold. It would be different if we were still down on the day. Then I could go ahead and hammer those, and like those small risks to get a big reward are worth it, since worst case scenario I just move the account value down, but I'm not I no matter what happens, I'm not going to change where the blow up point is. So I don't. It would be a good time to get a runner, because now I can just leave my stop there. And worst case scenario, I'm right back where I was before, down on the day. But best case scenario, I get the runner to go and get to a new max account level, and then I can start being um, stingy again. Okay, so they tried to pull it back, but look, it's going to be gold. So we have white, red, which is dangerous, and then they need to immediately beat this. So if this next bar does not hit 26, one point above this, it's going to retrace these bars. If it does hit 26, it's probably going higher. And like I said, if I wasn't at the account high, I could technically buy a pullback there. But this has to close bullish. Because essentially, this purple bar, it's asking to get liquidity stolen up there. And if you look at the smaller time frame, over and over again, purple bar, blue dot gives you 2 bars of extension. Now the thing is that distance isn't very many points. It's like 3 points, but it's consistent. Blue dot, 2 bars. Blue dot, bunch of bars. This one, you had to fade this little dip, but that was not very many points. 3 points. So if you got in here, you need a 5-point stop, and you could catch it. But look, if you just ignored the dots that were above the gray line, see the gray line here? So we're going to say don't buy if the blue dot is above the gray line. But, oh, look, we gave it up. I'll do that in a minute. Let's see if we can get this to roll. So they're trying to give this up. That's the linchpin point. This dot right there needs to get taken by a bear bar, which happened right there. We should see these get retraced. And if we don't, it's probably bullish. It doesn't have to happen immediately, but it usually does. I guess volume was up here. The dash was up here. So we technically didn't take out the dot with the volume dash, the little yellow line. And yeah, and they're connected by a line that's yellow as well. But the little dash in the bar is where the mode or the most volume was done in that little block. So there might be volume down here too. So I'm guessing it's bearish, but we really want that to be below this. And then it should give back. And as long as this holds, which is basically the gray line, it can still be bullish. But if this gets taken back, well, this guy's poorly positioned. He's way above the channel and above the gray line, which is the midpoint of the Keltner channels. These shaded areas are not Keltner channels. They're like the math uses like fib levels to adjust and tighten the Keltner channels. So it's basically the same concept, that if it's bullish, it should be above it. If it's neutral, it should do most of the volume inside. And if it's bearish, it should be below it. So if I just watch the yellow line, if it's above the channel, it's suggesting it's bullish. But now that it's come back into it, it's suggesting that it's not bullish. But the Keltner channel, which I don't have the outsides shown on Simon's, you can see it. This is the Keltner channels, and he doesn't have the midpoint showing, but he uses that outside and inside level to sort of determine whether or not the entrance is has like good expectancy. I find that the midpoint of that Keltner channel is actually the most important level to watch, and the fib channels will work better. They'll just be more responsive when it comes to figuring out sentiment. So this was bullish, but this is bearish to neutral because it gave up that position. And like I said, this telegraphed what was going to happen. I got out here. We knew the gold is likely to get retraced. They put in a white one. We got under it. We knew it's probably going to sell. The question is how far? So if they would have held this, I could have tried for dip buy, but they're not holding it. So now so far they've only put purple bars under here. So they could still rip it, because these purple bars are just buyers pulling their orders, causing price to drop. And now you can see we're under the fib channel and under the gray line. So if we close a bearish bar that's not purple down here, it suggests we should probably stop buying the dip if we're looking for like more than a bar or two of retracement. Like if we're trying to get to high a day, the opportunity was back here when it can't get under the gray line. You can see once it gets under the gray line, those buy opportunities, like if you put a line here and say that's support, I'm going to buy it, the chance of that working out all the way up is decreased, because now you have this to contend with as well as all the trap buyers. And remember, if we measure where the buyers were, you can see just by measuring volume, you can see hopefully that it's way up. You see all these buyers are a problem for bulls. So you don't want to be long here. See all these buyers up here? So this high volume area got left behind. And like I said, the gold bars tell me that there's a bunch of volume coming in way higher than it belongs, because most of the volume should have been here at the VPOC. But instead, we got this, like, it might not have been the VPOC, but it was a lot of volume up here. It was just spread out over a bunch of prices. So the VPOC, the point with the most volume, was here. But there's a high volume area above that. That's fine as long as it holds. When it doesn't, it's bearish. So could I have sold that? Yeah. But like I said, I didn't know if it was going to get caught here and bounce back up to here first before it goes down. So the better trade risk reward wise, since my stop has to go up here, is to sell a pullback. But you might not get that chance. And that's just how fighting the trend goes, because the only other way to get this sell is to take this one and this one. See how these are like red bars every time? That's not just bearish. That means that the bears actually put up a fight. Red bar. So when it's bearish, the red outline bars that are up here at the highs of the channel, those are going to give you an extension. Just like the green bars, which is the inverse, at the bottom of the channel is going to give you an extension up when it's bullish to the top of the channel. But if you put a green bar, see this one, top of the channel, gave you an extension. It didn't go very far because most of the volume is below you. So you're fighting against buyers. Like sellers are stuck down here and they become unnatural buyers that hold price up. And until that reverses, red bars aren't going to do much and green bars will cause lifts. But this green bar was positioned poorly. It's not at the bottom. It's at the top of the channel. So that's fine as long as you hold it. When you lose it, when you lose that level, it's now resistance. So like I said, you can short the breakdown if you want. It's not wrong. It's just risky because it could just, if you short this red one, it could bounce here just like this one bounced. Oops, bounced here. The only thing that gave us a clue was the gold bars followed by a bar that wasn't gold. And then it got out of it, got under it, and gave us another red bar that's still well positioned at the top of the channel. And this one, having a diamond and being purple and a star, all of that helps hold that level because they're defending it aggressively, quickly, and it means there's a lot of volume back here. And so those buyers gave up because it's purple. So that's a pretty strong. If I looked for spots where I've got a red bar with a yellow star that's also purple and has a diamond and it's positioned at the top of the channel, they're usually going to sell off even on a small time frame. And the inverse to that, a green with a star and a diamond on the inside that's pink, that's probably going to be a pretty good spot to see a bounce. Let's find one quick here. So this on the smaller time frame is the same thing. That one failed. It's very bullish, right? And once they beat that level becomes support because everybody expected them to sell and they didn't. Let's find the next one. That one didn't have a diamond, but other than that, it was pretty good. Oh, and this one wasn't purple. It would have been better if it was purple. Here, red, purple, star goes down. Doesn't have the diamond, but most of everything. Green, pink, diamond, up at the bottom of the channel. Red, not purple, no diamond, but it's got a star and it does go lower. So 2 of the 4 or whatever. That's just green, but it's bullish. Here's one. Red, diamond, star with a purple bar. That should go lower when it's bearish. If it doesn't, that's support. And you buy it here. Right? And you can do this on any time frame. It just, you need to decide if it's bullish or bearish, because if it's bullish and it sets up bearish, you want to wait for it to fail. But if it's bullish, it's just going to go. If it's the green one, the green pink. Looking for a specific, I might be missing some, but I'm not looking for the ones that work. I'm looking for the ones that are both outlined and pink or purple. Because a lot of the just outlined ones you can also use for support resistance. Like, look, this one's not purple, but it's got the outline and it didn't go anywhere. And eventually that becomes support, right? Whereas this one, this red outline did get an extension. And so they never come back to it. Oh, well, they did. Yeah, they did. I'm wrong. If you do that on a green one, green with a star, not pink, it becomes support again. But you'd have to be ready for that. And then traded through it. This one was just green. They didn't go anywhere. You'd think it'd become resistance. It does. Then they overtake it. It becomes support. Right? So even on a tiny little time frame, even if you just understand that one pattern, we just keep going. You can set up a lot of trades. They're just slow developing. So here, this green got beat, this green got beat. So if this becomes resistance, it's probably a pretty good sell because it's better if they don't go anywhere like this one. See, this one doesn't go anywhere. It becomes resistance if it's bearish. So where will it bounce if it's bullish? Find a red one, preferably that's pink or has, see, this or purple. This one was poorly positioned, so it was immediately trapped and became support. That one's already been used, though. It's way better when they're purple. Here we go. That's one. So let's watch 14,440. and see if we can get a bounce there. Otherwise, it's too bad wasn't aggressive here, but you know, you gotta pick your spots. There might have been news or something, I don't know. But let's see if we can get to 14,440. Now, blue is the opposite of the gold. So we've got repricing going on here where sellers are willing to sell even though value is poor. So if we can put another sell bar down there and then beat it, that's usually going to get a lift. Otherwise, this is probably resistance, and we can probably sell it if we want. Now, on the big time frame, what we're dealing with is we came up here into that area that I said might cause some trouble, and we're just evacuating the building because this has no structure. So we're coming back into this structure. See that? And these are single prints. So if we break into those and if we do get under 440 and we start going lower, it could go to the midpoint of that, which is like 420. So we could see a 20-point drop there if 40 doesn't hold. Oh, wow. So if this one gets beat, it's a pretty good long because it's got divergence. It's orange, so it's double divergence. It's divergence on this time frame, the dot, and then divergence on that other smaller, or well, here it's higher time frame, plus repricing, plus a volume shift. So this is a very bearish bar. If we trade above that, someone's very stuck. So for now, this should be resistance. And I know that's confusing. It's like, why would you want to buy if it's a resistance? Well, we want to buy if buyers actually beat it. But until they do, assuming it's bearish, that's going to be the point where sellers come in. And you could also use it as an opportunity to sell the rip, but normally we'd want a little bit more movement for that. But see how they got blue and then not blue? So just like how we had gold and not gold, and when we beat that with the dot, it went lower. So if we can beat this dot, or even this guy, and get volume above them, it could actually rip back up and we might be able to buy it. And the star here means there's an aggressive seller there. And those guys also tend to produce opportunities to squeeze when you beat them. So what you'll find if you've watched my streams before is even though there's a lot of signals, most of the patterns are like related. It's all like wait for X to beat Y and then go long, or wait for Y to beat X and then go short. It's very rarely just this signal gets me in, but sometimes it's this signal followed by this other signal. Like purple bar followed by blue dot is usually a buy if it's bullish. And pink bar followed by a black dot is usually a sell if it's bearish. If you're in position correctly. You also need to think about that. You don't want to be just selling when you have poor risk reward, but assuming you have a target far away and you can put your stop above here, if this was pink after a move up and then you got the black dot, that's usually going to go lower. Here, they're trying to push it, but there may not be any fuel left. I don't know. We'll see. I wouldn't be surprised if you look at the higher time frame, maybe this one, there's this little divot, like this little bounce. And I wouldn't be surprised if they take liquidity down there. Oh, it's right there. So I kind of doubt that this works, but let's see if they can get under this and then rip. That would make sense. Now, the purple backgrounds, if you mark where these are, they are a very easy place to take pullback entries. So like here, I can probably sell that. Like risk reward's kind of poor, but that usually works. And we should be able to get 40 at least. We're going to move this up a little bit. Oh, wait, wrong way. 40. make sure I get fill. And then we'll probably just go ahead and exit if it doesn't get to 40. So I got short on the 2-bar combo, pink bar followed by star, particularly because it looked bearish and we came back up to a purple background area and they rejected it. So it could do it again. But again, I'm at the high point of the account value. So I don't want to be too aggressive. And I probably didn't have to move that target, but I was feeling frisky and just kind of wanted to get it paid for. So we're going to move this down in case they flush, but I'm expecting to exit here because I think they're going to buy it, but they might not. Okay, that's good enough for me. It probably keeps going, but seeing the blue and then one that's not blue, see how this one doesn't have a blue outline? Usually that's dangerous for selling. Not always. Sometimes it's the start of a really big move, but usually it means that this is a linchpin to go back higher. So all of a sudden we went from negative, whatever I was, 200, just continuing to hammer the process, and now I'm up 710. So, I mean, it just goes to show that, like, you, and I didn't do this perfectly. I made all sorts of mistakes. I missed trades, right? But if I can average 700 a trading day, I only need to make 9K in here to get the PA. So let's say like my average win is 700, and if I lose 700, I quit for the day. Well, assuming that I've got a decent like win rate, and I do. I have more winning days than losing days for sure. But some days I do lose 3 in a row and then I'm just done. Let's say that I took 6 losing days in a month, right? Which is probably more than a max loss days, right? Which is pretty severe. So, but then between that, I'm getting $700 a day. So like we go up for a week, that's 3,500, right? And then I have 3 down days. So now I'm down like 14 under that, but I haven't blown up, right? And then I get like maybe 4 more days, right? And then 3 losing days. I'm still not, we could do the calculation if you want, but I know I've done it before. You're not going to blow up yet. And then if you had 5 winning days, you're pretty much back to where, not the max, but back to where you were before you started taking the drawdown. And so now you can go again and, like I said, get a couple more days in a row, be a little conservative. As long as you're not tilting and you actually quit when you're not trading well, and you have an edge where you can reasonably do $500 to $700 a day, these evals are passable. They are. Is it easy? No, because it gets very frustrating when you're making decisions not based on expected value, but based on whether or not you think you're going to affect your trailing drawdown, and then you end up missing trades because you didn't hold runners, right? All that stuff is more frustrating than trading cash. But eventually, if you can earn the performance account, trade responsibly, and follow your process every day, most days, I should say, because even I don't follow my process every day, but most days, you should be able to get the account. And then if you trade small in that account, you know, you can build up your equity in there. And if you have a cushion, you can pause the trailing drawdown and suddenly you can go back to trading optimally. And like I said, in the meantime, what I'm doing is trying to qualify more accounts so that I can have a stable of accounts just churning, like with micros, maybe $400 a day. Because again, I'm trading 2 minis here. I might not take that level of risk with a performance account when I have a trailing drawdown, because I want my chance of losing that performance account to be like next to nothing. So I'll trade 6 or 8 micros maybe in those accounts. But if I have 3 of them or 4 of them, all of a sudden it's as if I'm trading two minis just by using the trade copier. So push a button on one trade, it applies to all of them if you set it up that way. And yeah, you can have a consistent income from trading without a big commitment financially. Because here's the thing. I mean, a lot of people complain about these, like the rules and stuff like that. But think about what it offers you versus a cash account when it comes to risk reward. Your risk is blowing up the account and losing the amount you paid for like the evaluation and like the data fees and stuff for the for the performance account. So the risk is, let's say, if you pay the one time lifetime fee for the data, it's $250 right now. Or you can do it $80 a month, I believe, for the performance accounts. So, and then to get the eval, it's 80% off right now. So you can get the 150K for, I think, like 60 something. So let's say you got, let's say it took you 3 tries, pretty reasonable. So you paid $210, right? And then in evals. And so that's a commitment, right? Like that's like equity, I guess, or risk. If you blow it up, obviously you'd have to start over. And so there's that. And then you'd have to pay the $250 lifetime for the licensing and data. And so that now we're at $460, I believe. And you'd have one account and your risks have been paid, right? So that $460, I don't want to give that up. So I'm going to trade carefully in that performance account, way more carefully than I was when I was trading the evals and I was only risking $70 or whatever. And plus the time it takes you to like earn the performance account is valuable as well. So, but that's my max risk. If I blow up, the company might lose $4,500 or whatever. If I just go in there and I don't make a single dollar and I just blow the performance account like on like a 16 contract trade or something, they lose $4,500. But I am just out my 400 and what was it, 420 or something like that, 410. That's my full risk. If on the other hand you're using a cash account, and let's say you go and trade and you get into a trade, you put a stop loss, you do everything you're supposed to do, and the routing company like just stops working, or for one reason or other your stop doesn't hit or it doesn't trigger, and price goes through your level and you're not able to put any trades because your broker's down or whatever, maybe you have no electricity and you don't have a access with your phone or something. As the market runs, not only could you blow your entire account, you can actually lose more than what's in your account trading futures. The broker can like put a lien on your house, on your they can garnish wages to pay back losses if you lose more than your account value. They are supposed to liquidate you, but it costs money to get liquidated, usually about $50, some maybe 60. I used to use AMP, and I think that was 55. I still use them, just not very much. That's why it says daily profit loss 0, is because I actually have it set up through AMP. But, oh, did we miss the setup? Whoops, I was distracted talking about evals. That was our setup. I said come back to 40 and bounce. Whoops. That's okay. I got the short a little high from the big gain. So, what was I saying? So, yeah, this actually happened to me. I didn't get my house taken or anything, but I was in a trade with AMP, and it routes through CQG. I put in a stop loss, okay? The stop loss should have been triggered as a market order. It went through my stop, and it didn't trigger. it turns out that at that moment, while I was in the trade, CQG went down, and they were down for almost 12 hours. In that 12 hours, the market tanked. This was like maybe 2020, I guess, maybe, I think. Market tanked, and I got access back to my account at like 3 in the morning. And all day, all I was doing is like calling AMP, trying to figure out what's going on with my money. How can I like limit my risk? And they wouldn't let me put in any more trades because they couldn't route them properly. So I couldn't hedge, not with that account. I ended up, and then it was overnight. So I couldn't like buy puts because it was overnight. And I didn't have another futures account to like stabilize and hedge. So I was just stuck. Thankfully, they did get the routing working, and got me back. But they automatically triggered my market order at the point right where they came back in. I was just out of the trade, and so overnight I lost like 4K. And normally, if my stop would have gotten hit, it would have lost like $400. It was like 2 contracts, right? Like I didn't think I had a lot of risk, but it nearly blew the account up. It wasn't a large account, but still, that was $3,500 I was not planning on risking, and it was just gone. And I could have taken it to like small claims and tried to get the money back from CQG, but AMP basically put their hands up and said, it's not our fault. It wasn't the broker. It wasn't us. If you want to take it up at CQG, here's the process. And I had to get involved with a lawyer and stuff, and it just wasn't worth it. So that, which is frustrating. I mean, if it would have been a bigger amount, I probably could have gotten at least some of it back. But one way or another, it's a headache. And the fact that it made me realize that, like, just because I have a quote unquote small account doesn't mean that I have a small amount at risk trading futures. You can lose more than what you have in your account in those situations. So, and then I have a friend who bought oil when it was at like 2 cents. And when it went below 0, his broker wasn't able to process that information. So he wasn't able to get out because their software wasn't built to handle negative numbers. So it just blew his account. And he ended up taking to court because they tried to garnish wages to pay back the difference. But this is just how trading futures with a cash account is. And it's not something a lot of people talk about. It's not something people like to talk about because no one wants to be put in that situation. But one way to avoid it is to trade with a prop account, because this way I know my max loss is $420 or whatever, $420, not, who knows, an unlimited amount if something goes wrong. If something goes wrong, I lose my account. Apex, the company, is on the hook for whatever, routing issues or whatever. Like, that's their problem, not my problem. And for me, that it's worth the sweat of proving that I can be consistent and that I may take losses, but I know how to manage them. I would rather go through their strict rules and limit my risk, even if it costs money to do that, just for a chance to trade with leverage using someone else's money, so I don't have to worry about those extra risks of like technological difficulties putting me in the poorhouse or something. Like, yeah, of course you might get your account blown, but at least I don't have my house at risk, and for me, it's worth it. But with futures, just realize, like, the reason why they make you go through the evals is that they don't want to give real money to people who are just going to gamble with it anyway. So don't gamble with it, just do what you're supposed to do. All right. Market's about to close anyway. I probably wouldn't have taking that long, but just to show you how it's set up. Remember, we marked off this level based on where'd it go? The red bar that's also purple. I marked that off as a potential support. It worked here. They came back to it. Tried to get under it. Got volume under it. Closed bullish with a green bar. Very strong. They came back under it or to it. Found a buyer. Blue dot. Diamond. Star. Pink bar. Everything is good. It's even got an X. It's got a ring back there. It's got an arrow on it. Like, every signal is going off there to tell me, like, there's a ton of reasons to be interested in this move. And then the one right before it had a star and an X and a dot going the opposite direction. So once I beat this guy, we are going to squeeze because these guys are now stuck. So that pattern, when you're at the lows like this and you get aggressive sellers and they're followed by sellers giving up, pink, especially two pinks, and then aggressive buyers coming in, all you need after that is a triangle. And that triangle will get you going most of the time. Does it always work? No. Sometimes it comes up to this one, pulls back, takes out your stop, and then it goes. But most of the time, it's going to come up here to the next support resistance level. They're going to try to defend. Comes back into it. We had this one marked for another green bar or red bar that was pink or purple. They put star with diamond and a dot, and they can't, for the moment, beat it. So if you look at the gray line here, remember that that's the middle of the Keltner channel. So X's to the upside that are above that line are vulnerable to getting trapped. So we can't get volume down here on a bear bar. Otherwise, they will rip it down. So I can put my line here and say, as long as the yellow line on bear bars like this stays above that line, I'm good. And when they do put it underneath, but they go bullish, buy. If you want to wait for the triangle. It'll usually come shortly thereafter. And that'll be your confirmation that you're likely to go higher. And the good news is, because I know if I get volume below this line that I'm bearish, I can just put my stop under this and let it go. Because if I'm wrong, I'll stop out and it'll probably go lower. If I'm right, it'll rip. So let's see if this works, and then I'll close it down, I think. Unless people have questions and stuff, but I don't think there's a whole lot of people in here, which is fine. And not surprisingly, we're going higher. So net, I'm up 654 in the account that I opened right before I started this. Pretty good for 3 hours of trading. That's like, what is that? $200 an hour? That's not really a fair math. But I think the important thing is to show that you don't have to be perfect. I made plenty of mistakes. Could have easily had this above $1,000 had I traded more optimally. Even got a little frustrated. Was able to come back. Had more opportunities. Took advantage. Ended the day pretty average. So. And just to show that this is not an anomaly, here's my net P&L across the other ones. The first two are performance accounts, and that's why they are smaller because they're in micros. I target around $300 for those, 400 gross, and yeah. So, and then that other one, that 1100 one, is another eval that I was doing along with it with minis. And so if you see, there's almost the same number of wins and losses because I was copying most of my trades across, and then I took a trade that wasn't. I practiced a little bit with the new trade idea, and it worked. So I have a little bit better win rate in that account, but all of them are unacceptable level. Like trading with 60% win rates and higher, I'm gonna do fine. So just to show you, and I've shared that before. Like that's pretty normal for me. I've seen win rates of mine up above 70%, but normally it's above 50. I've really been working hard on trying not to like trip out when I have a poor win rate. So one of my goals is if my win rate drops below 50%, which I know because of my style of like scalping and taking profits often means that either I'm doing something wrong or the market's just, I'm not like trading the right trades for this condition or the right direction or whatever, that once I get under 50%, if I'm red, I should be sizing down. And if I'm green, I might want to stop because it's rare for me to have green days when I'm below 50%. It probably means I got a little lucky, or maybe I had a runner that paid, but like I'm not necessarily trading great. So yeah, that's just it's not a hard and fast rule, but if I notice it, I will make the adjustment just because I know my metrics. So not surprisingly, we lift again. And I mean, on the big time frame, you can see that they can't get below this gray line. It's just not bearish. It's just not bearish. So when they do get under the gray line, it's purple and then green off they go, right? So here, purple, white, they try to go higher. Purple underneath, star, that looks pretty bullish. They put a bearish one in, and then the green fails. And so now they get a push. That's the biggest push we got on a higher time frame this morning before the open. There's a really big push to the lows. They responded with a star followed by triangle up. Super strong. So if you look, here's where we knew we had the star. Let me show you. On the smaller time frame, I knew that star printed at 14,300. So I didn't know about it down here, but the market opened. We were way low. We have blue, not blue. Trade above it. Bullish, right? Purple bar followed by X or star. Both of those are good if you're bullish. And triangle up on a pink bar that got above a purple bar. As long as you don't have that dotted line in the way, it usually lifts. Where is it going? Probably the dotted line. It's mean reversion. You're going back to where most people got involved. The developing VPOC is a very good target, which is why you don't want to enter when you're right under it. So that lifts, and then star down. Oh, plus star down gets beat. He's stuck. They try one more time to defend. He gets beat by a triangle. We go higher, right? These guys are stuck. It's going to be very hard to get back under him. And on the higher time frame, we got, let me just delete. How do I delete just this one? I don't know. Let's see. Is it here? Oh, that was the wrong one. Oh, that's this one. Okay, so this is where I knew that we had a star on the higher time frame. So if I was doubting back here that it was bullish, usually getting a star that touches the blue line, or at least is beyond it or near it, not necessarily up here in the middle, but down here, is a pretty good sign that it's either bullish or neutral. And you can see here that we've got building volume, aggression, and momentum is like, this is low, higher low, low, higher low. That's usually pretty bullish too. You don't necessarily just want to buy because you'd have to put your stop at the low of the day. Well, that's like a 50-point stop. That's not going to work for me. So instead, what I want is to wait for some sort of a pullback. And then since these guys are trapped down here, I don't expect, once price gets out of here, I don't expect price to get back in here. So price pulls away. If you miss that, you have opportunities to get long. Maybe here or here, because you got purple, and then you got above purple with the pink bar with the triangle, and the dotted line is below you. Specifically where it was when you had that purple bar. And then it happened again here. Purple star, right? But the dotted line is above you. So you might want to wait for the triangle. And now the close is above the dotted line. So that's bullish. Now, you'd have to put your stop down here under the swing low if you tried to buy this one, even though it doesn't make a lot of sense because the dotted line's above you and you haven't gotten the yellow VPOC line above a purple bar. If you bought this one and put your stop right here and got stopped out, well, then your next opportunity to get long is here because you've got diamond, triangle up with the pink bar, you're above the dotted line, and it's bullish, higher lows, but on the indicator, lower lows on both of them. So that is divergence or hidden divergence, and that's going to result in trend continuation to the upside most of the time. Now, this level could get tested, but underneath here should not. So if you're trading with an eval and you're at the high watermark of your max account size, well, you probably want to take profits like either at this red one, because we know those red bars are often defenders and it's at resistance. It's at overnight high. So that's a decent point to take profit. Otherwise, getting under a green bar suggests that bears are at least attempting to pull back. And they do. Now we have purple. And then pink gets above it, right? The dotted line here where the purple was a little high, so we might want to wait, but that's probably good. Plus, we have ring, triangle up, and I'd say that's at support. If this fails, the next low should be bought. Okay, right here. That is a buy. So if you put your stop right here and got long here, this ring triangle up suggests that this is a linchpin point that's probably going to break out. We just needed to develop volume lower. So now look, purple, dotted line, need to get above it on a pink bar. That's it. And you're off. Oh, maybe not. One more try. So you got a little something. I'm surprised. They trap back in here, purple bar star. So I would have taken this. I would have gotten 10 points, and then my runner would have stopped. They do get under here. Okay, so I'm looking for the first opportunity to buy. And it's right there. Now, if you didn't want to take that because the dotted line was here, you could wait. And now purple, followed by triangle up, and you're clearly above the line. So that is your conservative entry. And now you're good. Now, once I get this triangle, I'm probably putting my stop here. Oh, that's probably why I got stopped up. Did I do this live? That's pretty much exactly what happened. So that sucks, but that's just reality. Did it get under this? Yep. You would have to have it down at the dotted line. That sucks. And that's why it ripped. because everybody apparently put their stop here. So that's like I said, if you're trading an eval at the max, you can't have a 20-point pullback. Like if you bought here, your stop has to be here. So I guess maybe below a pink bar might be good. One way or another, could you get long here? Not totally sure. Maybe on another time frame. What does this look like on the 24 tick? Ah, purple bar, star, bullish. Star down, gets trapped, triangle up. That's clearly long. Yeah. So that's why I have this other time frame, because sometimes you're so zoomed in that you really can't see the pattern here. Even though it is trapped back in. You got barely under, and then close the first bar back inside of the apex bar. So that's another reason to get long. But if you didn't take that, it's this one. So you'd get, it looks late, but this breakout is basically okay to buy, because on the higher time frame it's bullish, right? So up, up, up. So look, gold, not gold, you need to hold this. Gold, not gold, you need to hold that. So now our stop is here. Gold, red, they're probably going to pull back. They barely pulled back at all. Gold, not gold, stop here. See that? Gold, not gold. So this repricing just continued. So my stop is there, and I'm trailed out. And that's a pretty reasonable spot to get out. Okay, and this is pretty much where we joined it, I think. It might have been. So look, if one thing that a lot of people ask me is like, how do you keep from like continually buying incorrectly? So look, you might buy this, right? If you thought this was still bull, you're above the dot, but you don't have any purple bars to trap. So it's not a great entry. This one being purple, I'd take it and be wrong. But when it's not purple, I don't really have any, like the stars up here are resistance. I want them down here. So there's reasons not to do it. It doesn't set up perfectly. And then you have pink, get under pink, get under the dotted line with the triangle down. So that's a short, right? If you didn't want to take it, because the dotted line was down here, makes sense. Then you just have to wait for this purple to get beat, which doesn't happen. This purple to get beat with a triangle, doesn't happen. This purple to get beat, doesn't happen. So there's just, if you're not going to short, there's just nothing to do. Otherwise, it's short here. Or we know that this was the level to watch, but then you have a new, oh, you don't have a new pink bar. So this is the level to watch. We got triangle underneath it. So that's the first spot that you could probably short with that method. And you get 10. And then they get above purple and the dotted line with a triangle up. So that's a long. And you're good. Now we've definitely gotten back to where we were before, because here's this again. Gold, not gold. Trade under it. Short. Pretty sure we saw that. And then purple, dotted line, purple, trade above, triangle up, long. And it, literally, guys, like, that's all you need. Get the algo, and like, you don't need all these extra things. Like, I can do it here too. This is with like Simon's version. So we have, I don't have the dotted line, but I could still look for purple and pink bars or trap stars and get above it. So like star down, get above it. Star up, go long. Star down, get above it. Triangle up, get long. It's simpler, so you don't have as many things to watch, but Yeah, I like I said, I've gotten used to like adding things, but most of the methods I'm using are just things that Simon's taught. I'm just applying some of my own ideas to them. So, if you want to learn more about it, or want to get a free day pass, 5 day free pass, I can talk, to the room to trade futures with us, give Simon an email, trade the letter N, wordperform at gmail.com. Otherwise, you can always say hello at Twitter. I'm at RedBenTrader. All right, guys, let me know if this was helpful, and I'll see y'all